Stuck with a house and don't know what to do? Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim DePola and Johnny C. live on Real Radio.
Yeah, great to have you with us every Saturday on Real Radio. That's 92.1, 101.7. Fantastic to have you along. We offer you 2 hours of infotainment every Saturday. And thank you for finding your way in. Of course, you've heard that toll-free number. You're welcome to join in with your questions, comments, concerns in the world of real estate. That's 877-927-6969, toll-free. If you do that, the first voice you will hear is the melodious tones of our producer extraordinaire, Jimothy. How are you, my brother from another mother?
I am very good, Johnny. Good morning to you, gentlemen. Always a pleasure to be here with you.
Good morning. I can see Mike's computer. That's good. So I normally use Jimmy's computer as a little cheat sheet. See if we're streaming. Oh, we are. I can see Mike's computer.
See who's
right
here.
Now. We are streaming.
You look to see who's here.
Well, no, to see if we're on. Yeah, to see who's here. Right.
Where
exactly.
do you see it? In the window?
Through the window. Yeah.
Oh.
Yeah.
No, but I mean mine.
No, I can because you're turned just right.
Oh.
Yeah.
Wow.
I like the way Ross thinks though. I use Jimmy's computer to be like, who the hell is on the radio with me? We are streaming live, so you can join us. 101.7, 92.7, and of course, your free download, your iHeartRadio app. Those are wonderful entry points. And the cameras are set up, and they are working live streaming on Facebook and YouTube. Find us, Florida Talk Real Estate. That's Florida Talk Real Estate on Facebook, Florida Talk Real Estate LLC on YouTube. Ton of informational chunk videos right there. Of course, we gave you that toll-free number. Jimothy's going to answer it and line you up. I'm your boy, Johnny C., your air traffic control. We'll get you going. Of course, your air traffic control leads in all the important things, the valuable people, the most important people. The team that is assembled on a Saturday consists of Ross Komarinetz with Brightway Insurance, Juno Beach. Ross, how are you, my friend?
I am doing well. It's good to see you. Good to see everybody.
Clear for landing.
Hey, you put those down. Those are distracting over there, sir. Mike Rauch is with us on a Saturday. He's the mortgage guy from the mortgage firm.
Yes, sir. What altitude should I be descending to?
Whatever you're comfortable at. Whatever it takes, my friend.
Good morning.
Good morning.
What a great week coming up, right? We got a little cold snap coming through.
Do we?
Yeah.
Promise?
We're supposed to.
Promise?
Oh, well, I can't promise. It's like any weather prediction. It's 100% accurate 50% of the time.
So I will tell you, I'm anticipating at least one or two pretty good storms in the next few days. I just had a fence repaired in my backyard.
Yeah.
So it's time now for like 75-mile-an-hour winds to come and lean that bitch out.
Well, you
just like last time.
You test whoever installed it.
Yeah.
Did they do it right or not?
They finally took the car out of the fence.
There's no more car in my house.
Okay.
Yeah.
Nice.
Yeah, it's nice. Only a couple of months. Let's say good morning to our fearless leader. For 11 plus years now, I've told you he runs a top producing Keller Williams team. Keller Williams Innovations, he find the Florida Home Pros team, and my guy Jimmy D. It's Jim DePola. How you be, Jimmy D?
Hey, I needed that little smile, Johnny. Thank you.
You're welcome.
Yeah, because I just have this vision of you being like a movie character that every time you fix the house, some other insurance
I'm like John
calamity
Candy.
happens.
Yeah, I'm real life John Candy. Yep.
There you go.
Mm-hmm.
Oh, let's hope there's.
Oh, when I come home, I see it up, right? I'm like, oh, here it comes. Here comes the little tornado right down my. It's gonna happen. Just like the last time it went up, brand new. Mike, last time it was within a week. I think it was Matthew or Michael. Which do we have both?
I don't remember.
Hurricane Matthew and Michael, maybe. Yeah, here's a hurricane. Beautiful new friends. Had this sweet lean to it. It's kind of gangsta in a way. But had this sweet lean to it.
You can't get two M's in a row.
No, it was either Matthew or Michael.
Yeah.
I'm going to say
Matthew was the one who was supposed to hit us, and then it just got that
It
little
just
wobble,
stayed off?
and it stayed off for sure.
It was Matthew then.
Speaking of that, what happened with the storms on the west coast of Florida? I've been so busy, I haven't had a chance to look. Wasn't there a bunch of like tornadoes up there that hurt a lot part of the northwest part of the state?
I don't know.
I haven't heard. I didn't hear that.
Yeah, I saw the pictures. There was a bunch of tornadoes that went through, and it made a channel like through the state. You know, it looked like a lot of damage. I just have been so busy. It's like whatever, just another thing. I was so busy this week. I didn't have a chance.
Most of the news has been other topics right now also.
Yeah,
right? So
a lot.
It's a lot going on in the world.
Yeah, and I got to tell you, real estate is just, it's funny. Psychologically, you guys might think it's all woo-woo, and that's okay. But psychologically, it seems like when we get in these kind of things, like, we got the Ukrainian war, and now we got the thing going on in Israel and the Middle East right now, and everybody's kind of on edge. Before it was like the elections, let's say, 18 months ago, 2 years ago, whatever. And it seems like when I'm in real estate, people seem to be more on edge, even though it has not, that stuff isn't affecting their real estate transaction. They just seem like they have a more nervous attitude. They're not as confident things are going to go smoothly. They're waiting for the next thing to happen, kind of joking like you, waiting for the next thing to happen.
Right.
And
The other ball to drop.
I would really like to have a psychologist come on sometime, or, and talk about the psychology of real estate.
Tell me
that would
about
be
your
kind of
relationship with your mother.
fun.
I'm sure that's what it's going
or
back
no,
to.
they're going to say, tell me about your relationship with your 2-car garage.
Yeah. Wow. Tell me about your relationship with your mother-in-law suite.
Yeah, exactly. So, but it's been kind of wild. And I got to tell you, this week, yesterday was definitely Friday the 13th for me.
It was one of those.
Oh
Yeah.
yeah, everything.
It was for me too.
Everything was just going.
about
Did you have one?
Yeah.
I don't know that I did. Maybe.
I didn't even realize it was Friday the 13th until I was talking with my oldest daughter, and she's like, "Hey, it's Friday the 13th." I was like, "It was
Oh,
like
look at
6 o'clock at night." Oh, I didn't even. You're right. It is Friday.
Yeah. I've written 1013 a few times today. Just didn't.
Yeah.
Yeah, so it was pretty crazy. One of the things that happened yesterday was Mr. Jimothy here did not close on his house yesterday. Not the end of the world, because we weren't sure if it was going to be Friday or
No
Monday.
applause.
Oh.
Yeah, it was no Friday. It was not. We didn't know if it was going to be Friday or Monday, but it didn't happen yesterday, so it's going to be Monday. But the way it didn't happen was the crazy part. Don't want to get into it, but I don't like when people just lie to your face in order to make excuse why they can't close. Let's just
On
put
the
it that
phone,
way.
probably, right?
Well, on the phone.
Yeah.
Yeah, but
It's much easier that way.
yeah, don't tell me that you can't close because one of the vendors just doesn't have the time for us to close when that vendor happens to be a sponsor of the show for 12 years.
Yeah.
I think we'll know if they're going to let us close or not. So anyway, it was really crazy, but we're going to get it fixed on Friday.
We'll have it all. We'll celebrate next Saturday.
Everything else that we were working on, we did fix, except for one thing. We had one case that's just been going back and forth with a seller and a buyer for 7 days, and the whole thing's been a complete mess. And then it blew up last night.
What are some of the reasons? Like, what, I don't know the reason why they can't close on Jimmy's house, but when people.
Yeah, so they just to give you an example, like things that are happening, with people right now, where it gets all crazy and it shouldn't be crazy, and then it gets crazy, right? So we have a couple that wanted to sell a house. We put it on the market. They had a feeling that it would take us 30, 40 days to sell based on the neighborhood sales. And I sold it like in 4 days or 7 days or whatever. So they needed time to find a new place to live, which we had a plan for.
So you put the pressure on.
Well, there was multiple offers. So the person that won gave us a longer gave us what's called a post-closing occupancy, where after you close, the sellers still remain in the house as renters, basically, for a short period of time, and then and it's all written out in advance as you're going into contract. And then you follow those terms, and then they leave. And then you have a second final walkthrough when they leave as renters, not as owners of the property.
And that's very common with the simultaneous, instead of the simultaneous close, you basically close on the sale. You then have the money to do whatever you need to and the time to finalize your purchase.
And because we put it under contract so fast, the sellers weren't sure they wanted to take the offer, partly because they didn't know where they were going to live, right? So it was almost happening too fast for them. So the buyer was like, don't worry about it. I'll give you all the time in the world. You want 90 days after closing? No big deal. So I didn't feel like we need 90 days, and the sellers didn't either. So we agreed to like a 60-day post-occupancy closing. Well, then then we had a closing date set as what's called on or before. And this is a good teaching moment for people in listening that are just regular customers. A lot of times people put in the contract that they want to close on or before a certain date, not the date itself, right? And when you put on or before in, and Paul Krasker tells us not to put on or before in, but that gets to the whole thing. Everybody does it anyway. But when you put in the on or before in the contract, sometimes people believe that, let's say that you have a closing date of November 1st, and you put honor before November 1st. And then let's say one of the parties decide that they want to close early because something happened. Like my moving company can only leave at a certain time, or the buyer has a certain need or something. So they call up and go, hey, in order to pull my permits, I got to, I have to do certain things and I need you out. So is there any way we can close early? Right. Well, both sides have to agree after you sign that honor before November 1st, both sides have to agree to close early. It has to be bilateral, it's called. So Johnny couldn't tell me, hey, Jim, I know we have honor before November 1st. I want to close October 1st, right? And if I don't say, sure, Johnny, let's go ahead and close October 1st, we're not closing October 1st. We both have to agree.
Sure.
Well, now the buyer is with this one family, Ross. The buyer is now saying, after we're in contract, did the inspection, waiting to close, my sellers are still up in the air as to for sure what's going to happen in their life. So they need the extra time. Well, this guy wants to close early so that 60-day period starts earlier. And they're nervous about that. They don't want to do that because they want to make sure that they have time to know what they're doing. So the buyer is now really upset. And the agent, Ross, is saying, you guys agreed that you could do honor before and that you would close early. And we were like, no, we did not agree that. We agreed conceptually that we would like to do that if we can, but if we can't, we can't. And that's why we want to put on before. And then I told the agent, as we were going to contract, you understand that honor before means both parties have to agree, right? She's like, okay, no problem. Well, now we're in the situation. One side isn't agreeing. One side wants to close early. And now the agent's like, you promised. It's in the contract. It's in the contract.
Sometimes you get agents
And I'm
who
like,
want the before
yes, a lot.
because they put a deposit on a pool.
It's so true that a lot of times the agents are the ones that are pushing and creating a lot of problems because they want that commission.
Sure.
And it's crazy, and you can almost feel it. There's like a frenzy when they want to close and it's not closing, and they get extra angry. And and I'm not making fun of anybody. Everybody got to put food on their table, but it isn't really about you.
Nope.
It isn't about the real estate agent. Your commission is a byproduct of the work that's performed at the end.
Right.
So it isn't about whether the agent wants to close early or not. But that happens a lot, Mike.
Well, we have 3 professionals in the industry in this room, and we got 2, buyer, seller, homeowner scenario. And so raise your hand if you like when close dates move either direction, right? Like Ross. Yeah. If we have to push up a close date, pushing it back a close date's not a big deal. Mm-hmm. Ross has an effective date on his insurance. Oh. And so you go, wait a second, we got our insurance all lined up, which is required for underwriting. And now we need to push our close date up 3 days. Right. And we got to go back to Ross.
Oh,
and they got to redo their,
we got to rewrite the policy.
It makes sense.
Rewrite the policy. So double the work.
Oh,
I don't know how much work it is, but double whatever it is.
We got to rerun the quote.
Yeah.
Redo all the replacement cost stuff. Go through the application again, send it out to the, to the insured for signature.
Yes.
Send it to the, resend everything to the mortgage company.
Right.
Yeah.
So pushing back on that, not a big deal for Ross. And on my side, like, here's the thing. It's all, when you're trying to move close dates, it's like herding cats for us. We got to get buyers on board. We got to get the financing done in time. We got to make sure title can handle it. Title has to make sure sellers can handle it. Sometimes there's, different locations. It is. And then from a practical matter, like on the lending side, we're not prioritizing by close date, but if you have to prioritize, if you're like slammed on stuff and you got your processing team, right? And they're like looking at their pipeline and they're like, what has to get done? Like red hot priority. If you have a date that's for a little bit further back, guess what? You're going to get pushed. Even if you're like ready for the next step, you might get pushed just so somebody has to spend some time on another file. And so they hate it when we move close dates. Like Tiffany, Sarah, like my people, they hate it if we move close dates.
Just nobody likes it.
And I'm just like, it's tough. So I'd love to abolish the honor before, and let's just stick to the date that's on the contract.
Yeah.
Will you say something?
Well, originally our closing date for our current home that we're selling was October 5th. So I trying to get ahead on things. I contacted Ross and Brightway Juno and said, okay, well, as of that day, we'll cancel our current citizens policy.
Oh,
Well, big
Yeah.
mistake, because then
Oh.
I found out that, well, we can't close on that date. Now I've got to scramble back to Ross, and Chris helped us out a lot, and say, whoa, don't cancel that policy now. And that was my mistake. I shouldn't have tried to get ahead of the game.
No.
So you guys were nice enough. You got it, and got it set up so citizens would still hold on to the policy. And I was like, okay, now I won't even bother calling you to cancel that policy until we are done.
I don't
until
even
the actual closing is done, signed, everything. So
I don't even
lesson learned.
think about that stuff. Like, I know that people are planning events around a date, right? Like planning movers, right? Maybe you're starting your utilities. But what about stopping the stuff on the home that you're selling, right? Stop paying the water bill, stop the electricity, stop the homeowners. So isn't it just easier to pick a date and stick to it, Jim?
People,
And if we push, if
Yeah.
it's not, I'm not saying
Yeah.
you hit every close date, but moving close dates forward in time are a major
people
pain in the neck. And I
Well-
got it for everybody.
Well,
I gotta
first
say.
of all, I want to give Ross an apology because I don't know how many times I must have wrecked his day over the years, over the 12 years we've been together. I don't know.
He has people. He's got his team.
And a lot of times
Jim's
people,
unfazed, someone get that.
we'll do a quote and everything, and somebody will send us a request. Hey, we want to get this bound, and it'll be like 45 days from now. I'm like, are you? And then I'll get back. Are you really closing in 45 days? No, that's just the what. Okay, what's the earliest that you can close?
Mhm.
Okay, and that's the date that we try to shoot. When we can tell it's like an arbitrary date in their minds. We try and narrow
I
them
didn't
down
even
to
think of the bound stuff for bonding and the insurance. And then can you imagine when we were doing all those short sales?
Oh,
That's
yeah.
what I'm thinking, because you were our guy, when we were doing all those short sales, obviously, Ross. And during short sales, the dates were changed all the time, right? Because the bank didn't finish the paperwork on
right,
time. They
but that's
didn't
moving
respond.
back, which isn't a big deal.
That's okay. Oh, it's moving forward only,
Right.
earlier.
Yeah, moving back's not a big deal.
How
moving
come?
forward, because at the time,
What
Okay,
difference
let's
does it
just
make to move back or move forward?
so let's just say it closed. Closed. It was supposed to close yesterday. We
Mhm.
made it effective yesterday. All right, you close Monday.
Mhm.
The insured now owns the house. It's an active policy. All right, he owned it for, he didn't own it for 2 days. No big deal.
Mhm.
We're supposed to close Friday. I have the policy bound for Friday.
Okay,
You want to close
okay.
Wednesday.
No insurance for a
Now there's
couple
no
days.
insurance for the
I
buyer.
get it.
Right.
Okay.
Right.
I'm being dense today, guys. Sorry. It's been a long week. My head's
I
pretty
think what
pounded
you're saying
today.
is, why can't you just push up, like take that
Just go in
policy
there
that's
and just
bound
edit it.
move up the date, like
But-
just push
and-
it. But it doesn't work that way.
And then here's
obviously.
another thing psychologically that's happening. When people say no to this or anything, a lot of times the side is only concerned about their issues and they have no idea what's going on in the other person's life. So
Sure.
when they get the no, if I'm asking Ross to do something and through an intermediary, which is an agent, and say, hey, can you ask the seller Ross for blah 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 blah, and then Ross tells his agent, and then their agents and the bottom line is no, right? I hear the no, and now I come up with all these cockamamie ideas of why Ross is like not handling me right, when Ross might have a very legitimate reason that if the shoe was on the other foot, you would be saying the same thing. You would be saying, I'm sorry, I can't help you.
Sure.
Right. So it just gets really crazy. You have to really, the people that seem to have the smoothest transactions when I'm closing with people are the people that are the most level-headed and trying to be fair to both sides without being taken advantage of course, but being fair to both sides and not having that attitude. When I start getting into negotiations and I hear people start saying really negative things or mean things as we're going through the negotiation, usually those negotiations don't go as well as the people that are just honest up front. Hey, I'd like to buy your house. Let's see if we can make this work, instead of having your guard up and then like trying to be, we got a deal or no deal and trying to do that stuff.
Sure. That's
It
just
doesn't
human
work
nature.
out the same, and it's not the same experience.
I think you start to maybe you project your own sentiment onto the other party. So I'll just assume Johnny's negotiating from he's really strong negotiator. He's not going to give an inch type of thing. Maybe that's because that's my personality, where you might be completely reasonable. So
Right.
you start just thinking or having perceptions of the sellers. If you met face to face, it'd probably be fine. But you might put some animosity, in your feeling towards them.
Maybe.
And of course, the agents are important too. The agents are the ones who are supposed to be smoothing things over. And
Of course.
also, that doesn't mean you don't have to kick some butts sometimes. Sometimes you do have to kick some butts.
Yeah.
I mean, and real estate agents, Jim, are not all cut from the same cloth.
Mm-mm.
And so you get some of them that do a lot of transactions and they're super smooth. And you get some of them where it's like 4 deals a year. Like every deal is, and I take these very seriously, right? Like this is what I do for a living. I don't want to be the one who's holding up the closing. I don't want to be the one with the problem. I don't want to be in contracts that can't close. I take it very seriously. But if I was doing, one loan a month, I'd be really, even more on top of my game, right? Because I need it.
And
I need that.
and
I
it's-
need that deal.
And
I
it's
have to have it.
amazing how they act like they know what they're doing when they really don't know what they're doing. Instead of just saying honest and say, Mike, I don't understand your process. Can you explain something to me? And then the mortgage professional gives them the advice they need and they learn something and then they work off of that. Instead, they just roll right into whatever they're doing and don't think about the consequences or anything. It's really bad. I was just talking to a couple earlier this week where okay, so let's say you have an inspection report and then the buyer wants to ask for concessions on the inspection report. And
Sure.
let's say that they're legit things that normal people would say, hey, we got to work on this. We didn't know this and this is wrong with your house. Well, sometimes those inexperienced agents, they don't know how to go back to their seller and say, hey, we've got some issues that the buyer wants us to deal with, because they're afraid that it's going to be really, really bad because they have no experience doing it. They don't know how to approach it correctly to explain to the seller in a great way.
They also didn't set the foundation properly.
Right. So what they do is, instead of going back to, because they're so worried about going back to the seller, they start arguing with the the buyer's agent. They start arguing instead because they'd rather yell the other agent than go back to their seller. Now, if you're not a sophisticated agent, you don't even realize that's going on. All you know is you're getting beat up for nothing, right? And that agent just isn't trained properly in order to handle this correctly. And those are all deal killers. We haven't talked about deal killers in a long time on the show. And all of these things are deal killers that agents can kill your deal that could close just because of the personalities involved and how they handle it.
On either side.
On either
listing
side.
agent or buyer's agent.
Either side.
Yeah.
Right. So just don't do that. And I hope you got the little tidbit that if it's on or before in the contract, what that means is it can close early, but both sides have to agree. So when you're signing on or before, that doesn't mean it's really on or before. It's on or before if both parties
There's a
agree.
chance.
Right.
And not only do both sides have to agree, every professional involved, including maybe your movers, all have to agree, right? Like have to be able to perform, I guess is maybe the better way to put it.
Well, that's another thing. I have another case. This is October 13th, right? Friday the 13th. I have another case where they were demanding that we set a closing date and we don't even have clear to close from the title.
Yeah. Okay.
So they're demanding that we have our sellers come in and close early and sign early.
But title hasn't done their
title doesn't even they're probably 3 or 4 days out.
Yeah.
So they want to close a week early. That's what they're fighting over. And title probably won't be done until 5 days early, right? But they're like, they want to get everything done now, and we're like 10 days out. And we're like, just let the title company do what they need to do. Right. And then if we can close early, we'll close early. Up our favorite alarm.
I mean, I don't know all the particulars.
9:23.
That really sounds like it's coming from the agent to me.
Yeah, that's what I think too. I think a lot of it's from the agent. I've had a lot of agent issues yesterday. That's why I was like, when I plopped and I was done, I was like, wow, this is I saw it was Friday the 13th. I'm like, yes, it was.
I'm dealing with every newbie out there.
My poor mom. I had hi mom. I think she's watching. We had
Hi, Mom.
late dinner, lunch yesterday together. Oh my God, my phone was just blowing up with emergency after emergency. The whole time I was with her. I had to get all this stuff done. These people were
I could see you like getting into a little bit of a state. You need somebody you can back, like you need you to take this conversation, please. But then you told me that Nancy, who would be the normal backup, you said she got into it with an agent too. So now you need a third person to run interference for you with the negotiation, right?
It's so crazy. But anyway, enough about that. I want to
But those are only issues that happen to people that are busy.
Yes.
By the way,
true.
none of that happens if
you're
you are
not in
not
production.
busy.
Yeah, if you're not in production.
Florida Talk Real Estate is a very busy team of pros, and you get them all. We call it the one-stop real estate shop. It's floridatalkrealestate.com. floridatalkrealestate.com.
And I'm knocking on wood, and I'm giving a little shout out to the Florida Home Pros team, the team I created. But this year, we've had not one canceled or expired listing the whole year. And we're already in October, so I feel like we did pretty good. I don't think I've ever been able to say that.
Find the wood
in October. Of course, I'm knocking on the wood.
Yeah,
right?
and we had. I know you had one that bummed you out because it was a long listing, but
it looks like
didn't
everything-
expire.
No, it looks like it's gonna.
But
get
I know
through.
you didn't like it because it had a bigger number than you definitely prefer.
That one would have been expired. Just to be transparent, because he might be listening. Hello, Bryce. I was about to expire. We had 1 day left, and I said, look, give me another 30 days, and I'm going to change it around, and let's try it one more time. I'm pretty confident this one will work. And he did. He gave me the chance, which I really appreciated. And like 3 or 4 days later, we went in contract again. So,
boom.
yeah. So I appreciate that Bryce gave me the second chance on that one.
Beautiful thing.
That was a tough one, but, it looks like everything's going through on that one. I'm knocking on wood again.
Let's go.
So, shout out to Muriel. Muriel was so nice. She came to us. She's a big time fan of the show. She asked us to sell 2 of her properties because she's moving out of state. Another one of the people moving from Florida to another out of state area. She's going, I think, to South Carolina. And she had already found a house when she called us, or pretty close to finding a house. Yeah. So we sold the first house, did really well with that. Then we put the second house on the market. Then it fell out of contract. And the reason why it fell out of contract is the buyer had a contingency that they needed to sell their house to buy our house. They told us that they were the inspection was already completed and that the appraisal was completed but waiting to come back. So we went into contract, felt it was kind of safe. But then we found out that the roof was past its useful life. Oh. They started negotiating with the buyer, and then they canceled their buyer contract. So then they had to cancel ours. Yeah. So no big deal. So we put it back on the market, and 2 days later.
Yeah, it's not what they wanted, but
we put it back on the market, and 2 days later we took a contract. And right now, if everything works out, Muriel will actually make a little bit more money, like 1% more than she was going to make on the original deal.
Sweet.
Not guaranteed that's going to happen because there's a seller concession. We'll get into that when Muriel's case is done. But she's in a really good position, and she only lost like 7 days between going into contract and then falling out of contract, going back into contract. She
I'll
only
trade
lost like
7 days to make 1% more.
Yeah, actually, I would too. Imagine if you could do that every week. You get 1% more money. Just let it ride.
Line it up.
Don't get any ideas, Muriel. We're closing on this one.
She's like, let's set it back 35 days.
I mean, if you're getting 1% daily, take that.
1% daily, yeah.
I'll take that.
And then finally, I wanted to thank Muriel because she referred us to a neighbor who needs to sell her house, and talked to her yesterday, Peggy. And we have a meeting with her next week. So I'm looking forward to that. So thank you, Mira, for trusting us to refer out to your neighbors too. So let's see, where are we right now? What time is it?
The alarm went off at 9:23. So we're about 9:28.
Oh, 9:28. Okay. So
is that when that's going off?
Yeah, Ross is noticing it's a pattern.
Okay.
So we're going to take a little break right now. We're going to talk about a lot of stuff. The things I want to talk about most today are interest rates. Very big deal. Okay, not good news. Okay, don't know what the news in the future is too. We're going into a tunnel and don't see a light. We don't see a light coming at the other end, and we have no idea if there's a light coming anytime soon.
Oh, that's a soothing
I don't like
light.
that makes it like you're in a dark tunnel. I don't feel like we're in a dark tunnel.
No,
we're in a lighted tunnel right
now. It's like Halloween.
Soothing
Is it haunted too?
Yeah.
Well, we're going to talk about a haunted house that's for sale that was actually a movie prop that's for sale out in California. So we're going to talk about that. Thank you, Ross. And the other thing, Ross, what we were going to talk about from the insurance industry is that there was some analyst did a report. It was in the Sun Sentinel, but it was a national analyst. They analyzed insurance for 50 different countries.
Countries,
not just states.
Homeowners insurance?
Yes, homeowner property insurance for 50 different countries. And they specifically had some news about what they think about Florida's insurance crisis and the changes we've made.
Are we number one?
They said that those changes aren't going to make a hill of beans as to what's going to be happening with our insurance rates in the future. So
What
we're
do
going
they
to talk
know?
about
Great
that a little
news.
bit.
They live in like
Good
third
news.
world countries, probably.
Here comes
They
the
live in
great
huts.
next segment. Great news all around. We're talking interest rates. We're talking insurance, right?
Exactly.
What
So,
do they
Hey, I
know?
see we have a special guest listing. I see Keith M.
Oh,
listening
is he
to
here?
us. Shout out to Keith.
Awesome.
Thank you for
Hey,
your
Keith.
service. Always good to see you.
Keith,
Keith,
I
yeah.
reached out to your daughter, but I didn't do the other stuff yet. I'm supposed to talk to him. I haven't heard yet. So,
Okay.
Yeah. Okay, cool. Let's go ahead and take the break, guys. When we go on the flip side, we're going to talk about mortgage rates first, and we're going to talk about 1997.
Sweet. Great year.
Yeah.
Ah.
I'm going to go back and look right now during the break and see.
Take me back.
Ooh, that was
What does anybody
life-changing
remember
year.
in 1997? Give me something. A
I
movie reference,
graduated-
music.
I graduated high school in 1996.
Come on.
So that was, yeah.
Oh my God, I'm
Yeah.
so old.
Yeah.
Okay.
Yeah, me too.
Oh my
I
God.
was
I'm
Oh my
so
God,
old.
I'm
freshman year
so
of college, spring semester.
Right? Were you 96 too?
Mhm.
Class of 96?
I class of 93.
Oh, a little
Yeah.
bit older. Timothy?
87.
Oh, wow.
Oh,
That's more
81.
like you, yeah.
81. So,
81.
yep, class
I
81.
always
So I
make
don't
fun
know
of
any
Jim like he's
97.
old. He's not that old.
I don't
He's
know any
81.
97 references. The reason why I don't mind about being old is everybody says I'm not old. So it's okay. Everybody goes, you don't look your age.
Yeah, you don't
And
act
I'm like,
it.
okay. I certainly don't act my
No.
age. That's for sure.
It's better. You know what? Here's the worst thing anybody could say. Greek coming up, locker room, by the way. He uses this all the time. It's terrible. You look great for your age.
Yeah, exactly. Right. Yeah.
Oh,
It's
it's
like,
not a
yeah, you
compliment.
look great for your age.
Not a
Yep.
compliment.
I think Oasis was probably still on the radio. 97. Yeah.
Mhm.
Oasis.
Yeah.
Mozart.
I'm like, hang myself now.
It's all in the concert.
Who?
Mozart.
Oh.
That's great. Had the whole string orchestra and everything.
We're not talking 1797.
Gotta go back a little further.
A little bit. All right, let's
Okay.
do this reset. 4 minutes from now, we get back at it. You're welcome to join the program. Questions, comments, concerns, go ahead and dial in at 877-927-6969. You can do it right now. Wait the 4 minutes. Jimothy will keep you very well entertained during the break. Of course, we got important words that are going to be spoken in the next 4 minutes as well. Always remember, you can reach out to this entire team if you're not comfortable on the radio. Go to floridatalkrealestate.com. It's your one-stop real estate shop. Your entire team here is pros. Get it all at floridatalkrealestate.com. Know it, use it, love it, share it. floridatalkrealestate.com. Florida Talk Real Estate right here, Real Radio.
What's a Real Radio podcast? It's Real Radio on demand. Find your favorite show at realradio921.com.
For more information about contests on the station, visit realradio921.com/rules.
Here's what's happening with the weather on Real Radio.
From the Gordon and Partners Weather Center. Have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
I'm meteorologist Jennifer Collins with CBS 12 News. A hot and humid afternoon is in store with high temperatures in the low 90s, though feeling like the triple digits. We'll see a mix of clouds and sun with a chance for an isolated shower or thunderstorm through this evening, then partly cloudy, warm again tonight as low temperatures return to the 70s on Sunday morning.
This report is sponsored by Fresh from Florida.
We're all looking for the recipe for success. Maybe what you really need is the recipe for fresh. Luckily, that's easy to get. Just go to freshfromflorida.com. There you'll find all kinds of recipes that use in-season and locally grown Florida produce. Visit freshfromflorida.com to learn more.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
That's right, 877-927-6969. Toll free. If you got questions, comments, concerns, we got plenty of time for you. We'll take you up till 11. 2 hours of infotainment here on Real Radio every Saturday. Of course, I'm Johnny C. Jimothy is our producer extraordinaire. How are you, my brother?
Doing mighty fine. Good morning, gentlemen.
Good morning. If you do dial that up, Jimothy will line you up, get you on the air. If you're not comfortable on the radio, always remember you have access to the entire team. Reach out, floridatalkrealestate.com. You'll see the hotline there, 888-973-7828. 24 hours a day, 7 days a week, answered by a live body, again, at floridatalkrealestate.com. Ross Komarinetz is with us. You'll find him at Brightway Insurance, Juno Beach. What's up, Ross?
Juno, that's right.
My
Good
man.
to see you.
Good to see you as always on a Saturday. Mike Rauch with us as well. He's the mortgage guy from the mortgage firm. Hello,
Show enough.
And we found out.
Remember where that's from? Show enough.
I show don't.
I'm saying
I
Living
don't
Color.
either.
I'm saying Living Color or something.
But I think it's a movie based
From
on
the Wayans?
Yeah.
It's Wayans based.
Yeah.
Yeah.
One of the 11 of them.
Was it
I don't
I'm
know.
gonna
They
get
got
you?
a lot of them.
I'm gonna get you,
I'm
sucker.
Gonna
Was
Get
it
You,
Show
Sucker?
enough?
I love that. Is cult classic.
Yeah.
That is phenomenal, quotable, and I don't know if show enough is.
It might have came out in 97.
Well,
F the cup poured in my hand for a dime.
Yeah. One rib.
How much for
I'll
one
take
rib?
one. I'll take
That
one
is a-
order rib.
That's a very young Chris Rock.
Yeah, no,
Yes.
but that's classic.
That is classic.
Poured in my
exchange.
hand for a dime.
F the cup.
New Jack City, Chris Rock.
Yes.
Yes.
Is that
Good old Pookie.
you got change for 100?
You got
Yeah.
change for 100.
Is that from that one?
Yes.
And that's who's he going round and round with? That's Jim Brown and
Too tall. Was it too?
no, it's Jim Brown and who else runs that rib shop with him? It's chef from South Park. Help me.
Isaac Hayes.
Isaac Hayes. Thank you
Yeah.
very much.
Yeah.
Isaac Hayes and Jim Brown run that rib shop.
Is Isaac Hayes still alive?
I think he is, but
Okay.
he sucks.
Yeah, I know.
He turned
I
on
know,
South
I
Park.
agree.
'cause
I
they-
agree.
They started
He had
making
no
fun
problem.
of something that I get my butt hurt over.
Yeah,
Don't
and
make fun of
everybo-
everything else.
Exactly.
Don't
exactly.
make fun
Hey.
of what I like.
Yeah, exactly.
You
Hey.
suck, dude.
Oh, wow, he died in 2008.
Oh,
according
he
to-
is
yeah.
dead.
According
All
to
right.
Wikipedia.
Well, good.
Well,
Jim DePaul is with us. I didn't say that out loud.
I mean,
Rest in
Is that
peace.
right? Is that freaking right?
Huh.
He's been gone since 2008.
Well, that's why they replaced him as chef. And I don't know.
Wow.
Jim DePaul is with us on this Saturday. It's a good transition. He runs the top producing Keller Williams team, the Florida Home Pros team at Keller Williams Innovations. Jimmy D, how you be?
I'm also a wordsmith, Johnny. So "sure enough" is a slang expression meaning sure enough.
Sure
and
enough.
expressed in African American vernacular English.
African
American vernacular English. It was widely used in blues music, sometimes as an interjection. And then it says, it looks like here the earliest known written reference of "sure enough" or "sure enough" was 1970 album by Sonny Phillips was the first time. And then "sure enough" was a character in The Last Dragon.
Boom, that's the movie. The
And
Last
then-
Dragon.
Yeah, The Last Dragon.
Which I'm looking at it here.
And in
it's-
1998, "sure enough" was the album from the Black Crows
So
in 1998.
Is Last Dragon, is that the one with Kareem?
I don't know. Let's see. I don't know what
Cream the band?
Kareem Abdul-Jabbar.
Oh, Kareem. No, I'm sorry. I heard you say cream.
Yeah, that's that African American vernacular coming into
No,
play right
that's
there.
a Bruce Lee one, the one that you're talking about.
Isn't
This one was a comedy. It is comedy. It
Oh.
wasn't the Wayans brothers.
Oh.
Apparently, it was produced by Rupert Barry Gordy.
Bertie
I don't know if
Gordy.
it's- I don't know.
Gordy.
It was
Nice.
19,
Barry Gordy.
The Barry
1985.
Gordy. Yes, it is.
And the only person I recognize in this movie is, remember Vanity from Prince?
Yeah,
She was in it.
she's hot.
Yeah, so we probably should just watch it for
Barry Gordy is Motown, by the way. He
that.
is.
Yes, you're right.
Motown.
You're right.
Yes.
Well, I think this weekend, does anybody want to catch a Buffy the Vampire Slayer
Nope.
show with me? Because
Nope.
it's coming on this week for the first time.
On what?
How about a Wu-Tang concert? You want to go to
Yeah, I want to
Wu-Tang?
go see Wu. I saw
Okay,
Wu.
well,
and
yeah.
Nas,
maybe we'll go to
a few
Wu-Tang
months
this week.
ago.
'Cause
Cream.
These are all
cash rules everything around me.
maybe we should
That's
go
right.
get some $1.30 a gallon gas. Maybe we should
I remember
do that.
those days. $1.25, $1.05.
$1.36 in Los Angeles for gas in 1997. The average home in Los Angeles in 1997 was $180,000. A median home was $180,000. Today
LA.
it's $980.
Where was
In
that show with
LA?
Wu Tang, by the way?
I'm sorry.
Where was that Wu Tang show? 'Cause
Yeah,
that was
I
popping
like-
then. ODB
rent
was there. and
rent
it was-
It was
back
probably
then.
Woodstock.
If you were
Woodstock 97.
if you were
Nice.
renting a 1-bedroom apartment back then, it would be $700 a month, not $2,073 a month like today.
Well, I think, yeah, I probably had a 3-bedroom, 2-level apartment in Northern Virginia in like 97 era. And we paid like $800 a month.
Each or total?
No, total.
Oh,
And it was hard making rent. We were split into 3 ways. It was still hard. you
Well,
know?
it's kind of
Yeah,
hard when your
sure.
brother does it. When your brother goes to work every day and doesn't punch in the time clock and get a
yeah,
paycheck.
it was in that era. It was in that era.
I
My
love
dad-
that story. He
yeah.
would go to work every day, but not punch in the
Well, they
punch
were
in the
very
time clock,
were
so they
very
wouldn't pay him.
strict. Yeah, they were very strict. You had to fill
But
out
he
your
came
time
in every
card
day.
as you're working, and for whatever reason, he just, it was one of those things. I think it's like if you dislike doing something, you just don't do it. But in this case, and they eventually got sick of having to fill it in. They're like, okay, well, if you're not going to do it, your paycheck is going to reflect the time that you put in.
And he would just show up to work
So I think it's I don't know, it was a long time doing that, but
long enough.
Right. Maybe you would think he'd learn a lesson after one, but I think it was more than that.
Can I ask you, do you know when he straightened up finally? If he straightened
He's a
up,
millionaire
did they
now.
give the money back? Did he give him the money back?
I
or no,
really
he
don't
lost
know.
it?
Yeah, I don't know.
Because the story I was told, he didn't get the money back.
Is this
Which
date?
I
Is
just think
that
it's funny.
yeah,
date?
Yeah.
Yeah.
I didn't want to say it on there.
Jeez.
Yeah.
But
Yeah,
you know
you're
my
throwing him
brother's
under the
name.
bus.
I know your brother.
Oh, okay.
Yeah.
All right. All right.
He's been to my house.
Okay, I didn't know that. Yeah.
Oh, wow, yeah. Yeah, they
That's
just
right.
partied last
Wow.
Still
night.
owes me $20.
I didn't know you knew him like that.
I do know him like that.
Has
he
been
punches
into
in
your
every
bedroom?
time he goes to my house. He clocks in and works.
Make it work.
Let's hear those stories.
Okay. So
Okay.
okay.
Wait, what's
so,
this show
That
about?
was the old. Okay, guys.
Yeah.
All right.
Well,
Let's talk interest
what I'm
rates.
saying is we have to, right. Exactly. It's like,
I
no,
like
let's talk
this
about good
97
stuff.
thing though, real quick. What else about 97?
I wish.
Anything else?
No,
No.
I think we're leaving it alone. 97 interest rates are kind of high. Oh wait, we're gonna be. That's what
Oh,
we're
that's
There we
right.
go.
That's
There
what
we
I'm talking
go.
about.
I bought my first house in '99. We paid. It was a townhouse, 135,000, and I think my rate was 6.5.
Because you had good credit. I bought in 94 and paid in the 9.25, and then my when I got a second mortgage for the pool, it was over 12% for the
Yeah,
second mortgage.
sure.
Yeah, back then because I had bad credit. So Mike was getting much better rates. than
Way
I was
better
getting.
rates, yeah.
So here's the deal. Our interest rates this Thursday,
And his
according to
financial situation changed dramatically in 2 years. Went from struggling to come up with a quarter of the rent.
That's
2
right.
years later to being a
Buying a
homeowner.
house. That's
Yeah,
true.
with
That's
great
true,
credit.
yep.
That's pretty responsible of you, Michael.
I
As
in
a
that-
young man,
in that
too.
span, I went from an hourly position to a salary position.
Well, there
So
it is, baller.
Yeah, yeah.
Changed your world.
And,
And you
know,
didn't get foolish with your money.
And I grew up a little bit.
Yeah,
you
you
know,
did. Sounds that way. Good
got
for
the
you.
old ball and chain around that time.
Well, yeah. So
That'll straighten you up.
you
know
weren't
that.
making decisions. You were along for the ride. Understand.
So
Okay.
the Freddie Mac report this week came out and it went up again. And if you look at this chart, it's the fastest increase. Let me see here. It's really amazing. I wish I could show you on video what we're seeing right now. From basically 2021 until today, we have basically the fastest increase in mortgage increases in the history since they've been doing this since 1971. There might be two other times since 1971 where interest rates spiked this high. Now, I know we're talking about a 2-year window, but if you look at this chart, it's totally vertical from 2021 to 2023, basically, right?
It didn't have to be that way. I mean, we could have slowly been bringing the rates up prior to years prior to. It didn't have to be that way.
Yep.
I'd be curious what the start point was at those other big peak moments.
I could. Well,
because we started at like 0.
I want to do that, but the way I have the chart built up right now, I don't want to move it, but
Totally.
I'll answer that in a second. So let me just go over a couple of things in the chart. So since we're at 757 right now, which is where the 30-year Freddie Mac rate is for this Thursday, I went back to try to find the last time we were at 757. And basically, it's very hard to get exactly 757 because, we're talking about 0.1 changes. So the first time that we got close to 757 since this week was December 2000. We got to 765. That's the closest we were to 765. But if you want to get even closer to the 757, you would have to go to August 1977. And in August 1977, it was 7.58. Right. So we're back to 1997 interest rates right now.
Look
is
what I
where we
did,
are.
Tom.
What did you do? I don't know.
You said you wanted to show
look at the
everybody
camera.
chart.
Oh, did you share it?
I got to get out of the.
Oh,
the
you
view.
share it? Yeah, but you're not showing the chart right.
But do you see it
change
going
the chart.
upwards?
Yeah, do this. Do me a favor. Move that little bar on the bottom.
It's,
know what I'm talking
it's
about?
a screen capture, right? It's,
Oh,
it's
you
my
did a screen
virtual
capture?
background.
Okay.
I just took a picture. I can't.
Oh,
I
you
can't
just-
adjust.
that's
but
pretty good.
It shows you the trend. That's a 3-year version.
That's a terrible trend. That looks like a nice gradual. Even that little jump you see on that thing, Mike, right there. Even that jump that you're
Stay right
seeing there,
there.
that's
Stay right there.
nothing compared to what we're experiencing right now.
Where'd Mike go?
It's nothing.
That's awesome.
That's pretty good. You did that, Mike.
Like
I have
on
to
the
learn
fly,
how to
too.
do more
Of
about
course.
that. Yeah.
I'm gonna
Yeah,
change it.
that's
to
amazing.
this.
Screen, right?
It's messing up. You can't see my handsome face right now.
So what is happening when interest rates get like this? I've heard of stories already where people have been blocked out from getting their mortgages because the interest rates were too high. We
So just flat out denied because you don't qualify. Is that what
yeah,
we're talking about?
There's
Priced
a lot
out.
of buyers
Yeah,
out,
priced
right?
out.
A lot
Yeah.
of buyers they're given, and tell me if I'm wrong about this, Mike. The ones that are tight, and usually at the lower price points. Usually, to me, it seems like under 500,000. And it's funny that you say lower price point under 500,000, right?
Just the competitive, like the most competitive market where there's the most amount of buyers are in that zone, right? And houses, the inventory is still very restricted. So it can take longer to get into contract. And a lot of people in my position issue a pre-approval, at the front, and they send you out shopping with the letter that says, you're good for $475. Well, you're good. You're qualifying for a payment. You guys know that. You don't qualify for a purchase price or even a loan amount. You qualify for a payment, which is a combination: principal, interest, taxes, insurance, HOA, like all of that together. And if the interest rate is changing while you're shopping, guess what? You're the maximum qualifying. Well, the payment doesn't change, but how you arrive at the payment, your price has to be less. Right? If interest rates rise, your price of the home has to be less. That's really the only thing. Something has to come down. And so you can be out there shopping with a generic pre-approval, which I hate in the first place. But if you're out there shopping for 2 months, which is very common for buyers, right? Especially at the very competitive price point. And I think that's what you were saying, Jim, is that so you thought you were good, and then because in 2 months we had an increase of 0.5% or 0.25 or whatever it was. If you were at the very edge of qualifying and now you're getting a home that's at the very edge of the possibility for you, you might not be getting your loan.
Here's a real life example of what can happen to you if you don't do things, even if you do things correctly. Sometimes in this case, everybody did everything correctly, at least on our side. And then we had a problem, and now that the deal almost fell apart. We fixed it, but barely. Okay. So what happened was a couple found a house that they really, really liked. This couple was working with a different mortgage company when they came to us, and also it was a referral from another agent. So we had to stay with the mortgage company they were with. It was complicated. Found a house, went to the mortgage company. We gave what I call the Maui Wowie, right? Does everybody know what the Maui Wowie is? Do you know what the Maui Wowie is?
Is it similar to the Zowie Wowie?
I don't know what the Zowie Wowie is.
Okay.
I mean, I'm familiar with Maui Wowie.
I know, right. So Maui Wowie, it's a term I created. Actually, it was I stole a little bit from Than Merrill from Flip This House, one of my coaches a long time ago.
Wasn't that Cheech and Chong who created that?
No, that was a different Maui
Wowie.
Labrador, man.
That's the one Rauch was talking about.
That's what I thought we were talking about.
So
headpiece.
What strain was that?
when you're going to buy a house, and we talked about this with Jimmy when he was trying to buy his house, what you need to know is if you're turning an offer and you're competitive, you have to have some idea what your maximum allowable offer is.
Yes.
So Than called that the MAU, right? So I changed it to Maui Wowie. What's your Maui Wowie, right? So what's your maximum allowable offer? You never go off of that. So that's making yourself be real with yourself, so that you can compete in a really strong way if you're in a competitive situation. So what does that mean? House is on the market for 500. You're turning in 450. Now it's a competitive thing. And now they're saying, bring your highest and best, right? So the person really would pay that $500,000 for the house, but they want to still negotiate in their mind because they just don't want to give too much, right? But they really, really want the house. So
and nobody wants to overpay or have a sense that they're overpaying.
So they move up from 450 to 485, let's say, which is a pretty significant increase from 450 to 485.
Big time.
But there's other people competing, and then other people gave list price or higher, and then our person gets blacked out or blocked out and loses the deal. And then I go back to them and say, I'm sorry you lost the deal. And their last offer was 485. And then if we know what they went under contract for, and we say, sorry, they went under contract for 500, and they slam their hand on the desk and say, damn, I would have paid that. Well, you just lost your house because you were messing around with your Maui Wowie, right? Because you didn't turn in your maximum allowable offer. You turned in below, and you were at your highest and best, and you didn't turn your highest and best in, and you lost the deal, right? So that's playing mind games with yourself, right? So really know your Maui Wowie and then work off of that, right?
There's also, I will caution people, if you're getting financing, there may be a difference between, hopefully you have some sense of this, what your personal max allowable offer is versus what
that's what the Maui Wowie is.
That's the personal.
The Maui Wowie is the personal.
You're assuming you can get the loan within those parameters.
Yeah, and sometimes your Maui Wowie is not your max loan. Like that, a specific house, you go, look, I'll pay this for it, but I won't pay that for
where's
it.
your line in the
But it isn't at your max, right? It's your max for that house. You should have a Maui Wowie for every house, right? Not just what's the most like Mike will give me. that's not the Maui. Sometimes that's the Maui, but
And
usually it's not.
How great is my tool, my app for that?
It is
for that process, because
It
you can
is.
just plug it in. Well, what if
And
I
it-
offer this?
And it's
how's
driving
this
me
going to change?
And it's driving me crazy because this one particular couple, that app would have been so useful, and they're using an agent from out of state. And to be honest with the mortgage company from out of state, and
Yep.
actually the guy's not bad, right? But it isn't working with Mike.
Well,
you
even
know?
before I had the app, remember I used to do my spreadsheet, and I still have that as a tool and sometimes do it. But that one, the good thing in that, Johnny, is I would have like 4 columns. You've seen those numbers before, and it'd be like, okay, here's loan 1, loan 2, loan 3, loan 4, and maybe I'm stepping it up or down 5,000. That's $30 on the payment per 5,000. You kind of know that because we talk about it. But to see that, and when you're negotiating with sellers and everyone's kind of getting to their lines in the sand, you could say, you really like how much you like this house. Are you really gonna like walk away over $2,500 difference?
Well,
which is
how about
pretty-
$70? So this is what happened.
70 on the payment.
Yeah. So this is what happened. They had the house was at the upper limit of their budget. And it was so tight that we ran the numbers with we got a quote from Ross, right? For the house that we're not even under contract for to get that idea. Then we also did the taxes, and we figured out what the tax bill would be. And then we also did, and then we're checking the interest rate and find out the most they can do. And of course, we gave them the HOA fee. Well, after we went into contract and we were right about to go into inspection, they called us back and said, I'm sorry, the HOA fee has changed. And it's $70 a month more. $70 a month. That blew out the deal. The deal was dead. Right?
Because they didn't want it, or
they were past the Maui Wowie. They passed
their
debt to
personal
income.
Maui
It was
Wowie.
debt to income.
Oh.
Now the mortgage company had already budgeted that the owner and he was going to contribute to buy down the rate.
Yeah.
And then he said, we are going to need the seller to give us a credit. We'll keep it at the same price that we're under contract for, but we need a credit of X amount of dollars from the seller
to go towards the rate,
to buy down the rate some more.
The reason for that is because you, as a buyer, just in general, this isn't exact science. There's some equations involved, but let's say you can pay only 3 points as the buyer. So if the cost for the rate costs 3% of what you're borrowing, 3 points, and you need to go lower on the rate, you have to find that money from somebody other than the buyer. So if it costs me 5%, so I'm paying 5 points for a rate, for example, I can only contribute 3% of that. So the other 2% has to come from somewhere else.
So that's most of what happened. So we went back and forth for 2 days, and this is a good example. The agent was top of the game. The mortgage broker was working with us very diligently. Everybody's communicating well. We stayed in contract. That deal almost died like 5 times, but it wasn't because anybody was mad at anybody.
Right.
It was all math.
It was numbers, yeah.
And we were just sitting down, running the numbers. So the our buyer ended up getting half of what the mortgage broker originally asked for, that said we need, because mortgage brokers they're always going to ask for a little. It's just human nature. They're going to ask for a little bit more so they have a cushion. So they kept, and the other side would not budge. So they just kept going down and down. And then we finally found the number, and he goes, we can make that number work and close for sure. So that's what happened. But that was all good work from everybody was working together to make that deal work for both sides.
Wanted to make it happen.
Yeah.
If you're at your limit on DTI, Jim, we're talking about going from, say, for example, the
well,
limit
let's
is 50%.
say what DTI is. Tell them what DTI is.
Debt to income ratio. So the percentage of your gross monthly income for the house specifically, and then for the house and all your other mandatory debt obligations, things like car payments, student loans, credit cards, right? So you add all that, and let's say it could be 50% of your gross income, Johnny. So you're making $10,000 gross a month, 5,000, 50%, 5,000 can be used for the new mortgage payment plus all your other payments. You got 2 car payments, a couple credit cards, maybe some student loans. So the difference between 49.99, which qualifies, and 50.02, which might not qualify, it could be that $70. It could be $30. And so if you're like right up against the limit, well, what happens when you are qualifying with an estimated rate of this, and then in those 2 weeks, the rate went up a little bit, or it costs more money than you have to keep the rate that you need to qualify, or the HOA is $70 higher, or the insurance comes in
A little higher than you
triple what
expected,
what
yeah.
your loan originator. It's not $1,200, Ross. It's not going to be $1,200. I need
Are we
that
buying
to
a
keep my GTI
small inland condo?
Yeah, it's fine. It's and so that's the world I live in, Jim. When people are pushing and when you're in South Florida and housing prices are
what they
generally high,
Yep.
and people are really trying just to get into a house that you want to live in, you'd have to tighten up, and that is the world I live in.
And it's going to be it's kind of funny. So now I'm finally starting to read in the newspapers, like I say newspapers, I'm so old school, right? But I'm reading in the media, right, about bubbles now, right? We haven't heard about bubbles in a long time. Now I'm hearing about bubbles, but here's the new theory. It's not going to, real estate, let's say.
Yeah, regional base though, right?
Well, no, they're saying it's kind of like a big bubble.
Oh,
right?
gotcha. Because
Yeah.
I've been reading in the last week that there's like certain states that are kind of cherry
Well,
picked.
we're
like,
more bubbly.
Pennsylvania, definitely. Illinois is happening. Like they're like, watch out for these states. We're not one of them.
Well,
fortunately.
what the new theory is that we are in a bubble, that these rates these price increases we've had with the housing market just are unsustainable, just like back in 03, 06. That's what they're saying. This is just crazy town. But the difference is we didn't have all those dirty mortgages being written, right?
Right.
But here's the thing. They still feel the affordability factor is almost the same as the dirty numbers because we're so unaffordable compared to before. Because you got to remember, look, in 1997, houses were $180,000 when you were paying 7.58% interest rate. The house was only $180,000 back then. But now that same house in Los Angeles is $980,000 at 7.57%.
It's easy. Here's the thing: like 97 was 26 years ago. I mean, it's a long time.
Yeah.
Like I still feel like I'm in 1997.
Yeah.
Right, in my own head. But
Yeah.
that's 26 years ago. So yeah, of course, housing prices have come up significantly. Guess what else has come up? Your pay.
Yeah, that's true. But there is an when you do affordability comparing apples to apples and you take that
I
effect,
get
it
that.
is more unaffordable than
I
it was
agree.
back then. So this is what they're expecting. The bubble's going to pop, but it's not going to pop. It's going to deflate. They don't expect the big crash. That's
it's
not
more like
going to
a
happen.
balloon.
It's more like a balloon deflating. That's what they're expecting to happen in the market, and that it's coming for sure. But there's going to be a deflation in the real estate market on the bubble. And what's going to happen is they're thinking, I hate to say this, but they're thinking 10 to 12% interest rates, and that mortgage rates go sky high. Fewer people are buying. There are people buying, but it'll be way less, and the prices aren't going to drop.
Well,
Just like you said back in the early 80s, and you mentioned that, and it was definitely true, Johnny. Even though we are at 18% interest rates,
right,
prices didn't drop.
Well, that's the interesting part of the equation. You're like, well, what did value stay? The value stayed there, right? So that's where you're like, okay, we might be able to ride this out.
That, right?
It was unexpected,
Yeah.
but it only feels like so inherently, it has to eventually work its way down, as you say, deflate, not pop. Because so let's just go into the world where we're at 10-12% mortgage rates.
God.
The only way you get any movement, people have to move or down, like you have to, some financial situation, some life situation. Otherwise, you're not moving to get into a 10 to 12% loan. You're just not.
Well, we're
talking about the masses.
What I think's going to happen, right?
Cherry pick. The only way that this can happen, because our valuations are all based on sales, right?
Mm-hmm.
So
the
market, as people start spending more over ask, your home is worth more. No, I mean, it's this bizarre world we're in. This house should only be worth what it's worth, but because the guy down the street decided he wanted to pay $500,000 for that house, my house is now worth $480,000, right?
So, but if we've seen these increases now, Johnny, and it hasn't caused what the root cause of it is the inventory. Right. So if people aren't selling, why would anybody sell if they have to buy something at 10 or 11%?
So when we get to this deflate mode, the only people that are going to be selling are people that have to.
Yeah.
And they're going to have to ask way less than what they probably could if you were like, I'm going to hold out and just let this ride. Somebody's going to buy it for what it's quote unquote worth at 10 or 12%.
No, but if you're the only house on the block in that neighborhood,
somebody's
you're
going to buy.
You're going to get the price you want.
Man, I don't.
Maybe,
10,
I mean,
12%,
I see what you're. Yeah,
I just don't see how that's going to work out that way. I think
that's
you're just
what's
going to see
happening today, though.
at 7%. At 7%,
Yeah, but
you're going to almost double. Like,
well, we
not
did double,
almost
but
double.
we've doubled.
But you did. To
We've
7
already
is
done.
palatable.
But Johnny,
we're to the point now where the brakes are just like the e-brakes are up. People can't afford it anymore. Mike just said he sees it all the time. People are already pressed to their limit.
Yes,
now
that
put
part's true.
5 more percent on there. Okay.
So it's, you're going to push a lot of buyers out.
A lot.
At the
All of
same
them.
time, you're pushing out sellers because you can't sell.
Well, that's what I'm saying.
Why are you selling? Because you have to.
So
not
the only
you
people,
can.
the only people are going to be the have tos, and they're going to have to ask for way less.
I don't feel that it's only for the sellers. It isn't only going to be have tos. There's a lot of people that decide to make a life change, and they're willing to pay the cost for the life change, right? So like you're getting up in age, and
but that's a have to though. Like I can't have this carry cost anymore. I'm on a fixed income.
No, but they might not have any cost at all. They just might want to get their equity, and that's the only way to get
and
it.
people, some people want to cash out while it's high, and they don't care about the higher inch. I'm dealing with a couple like that right now. They want to cash out because they feel we're as good as it gets, probably, and they don't want to worry that if it changes, they won't have time to react.
Right.
There's going to be
It's a nice place to be in if they don't have to, but they're like, this is good.
And they're thinking forward, and they're making all the smart decisions for themselves, and they're saying, you know what, I don't want to play the what if game. I know what I can get now. It's good. I'm satisfied with it. I need to do other things in my life. Let's do it now instead of trying to play, well, am I maximizing my ultimate profit I can get over the next 5 years? You know, they don't want to play that game, because if you play that game and you're wrong, then I'm going to go back to my deal where every time I hear this, I want a nickel. Oh, if I had bought in 2003, I could have got $800,000 for my property, or now I'm getting $300,000 in 2007. You know, I wish I had a nickel for every time I was doing a short sale or loan mod, and people was like, if I just sold 3 years ago, I would have had $150,000 profit.
Yeah, people want Mike to do it all the time.
So
should I lock now? What do you think? Should I lock now? What do you think?
Hard. That's
no,
hard.
it's not even should I lock now. It's like, should I buy now? What do you think rates are going to do? And I said, I wish I could tell you with any certainty. Here in my answer, my stock answer, Jim, is always like, sometime. Here's my prediction. At some point, and if you're waiting for rates to get to a certain level, at some point in the next 5 to 10 year window, that will happen. That's my right. If you want it to come back down to 5, I'm like, I'd say probably a 10-year window is a good amount of time where you can say rates might come back down to that level.
You know what Mike just said? What goes up must come down. It must come down eventually.
I'm probably right or wrong about that.
Yeah, but I feel good about the prediction of the deflation though. That feels.
Like
I don't think it's going to be massive though,
Johnny.
So, and when I say deflation, I'm talking about. Our bizarro world has been 10% increases of values, right? I think we deflate down to where maybe you have a 1% appreciation year, or maybe in a year where you're flat.
Well,
that would be deflating though, wouldn't it?
Let's go ahead and take a break right now, and then we're going to talk about what the prediction of is appreciation, depreciation over the next year or two, what they're saying about that, just to get an idea. And what we're trying to do is set a foundation. We're in a very weird market, super high interest rates, very low inventory. Some houses are going multiple offers, selling like as fast as it was 2 years ago, and other houses just sit there, crickets chirping, and people begging, come see my house. So we're trying to give you understanding ideas right now through all these different professions as to understanding the market. We're going to talk about appreciation, depreciation for sellers, and what homeowners expect on the flip side.
A lot to get into. Still got about an hour remaining on a Saturday. That's 2 hours of infotainment we promise every Saturday. And you're welcome to be a part of it. Toll free, 877-927-6969. I'll give it to you again if you want to write it down. 877-927-6969. Of course, if you're not comfortable on the radio, always remember you have access to the entire team, not just those that join on a Saturday to entertain, but the entire team of pros. You get them all at FloridaTalkRealEstate.com, the one-stop real estate shop that is FloridaTalkRealEstate.com. We're back in 4 minutes. Great to have you with us every Saturday. Florida Talk Real Estate right here. It's Real Radio.
The bad news, the brain isn't all that great at hearing stuff and remembering it. The good news, you can watch us too. Like and follow us on Facebook, Instagram, and Twitter at Real Radio 92.1.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
The Anajar and Levine Accident Attorney Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Listen on your free iHeartRadio app for all your music, radio, and podcasts. Free never sounded so good. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
That's it. Toll free, 877-927-6969. If you'd like to get involved with the conversation, if you have questions, comments, concerns in the world of real estate, dial it up. Jimothy, our producer extraordinaire, he'll pick up the phone. He'll line you up. How are you, my friend?
Very good. Thank you very much. Good morning.
Good morning. I'm your boy, Johnny C. Of course, if you're not comfortable on the radio, always remember Florida Talk Real Estate is .com, your one-stop real estate shop. It's floridatalkrealestate.com. If you are comfortable on the radio, you might want to call and talk with Ross Komarinetz, Brightway Insurance, Juno Beach. What's up, dude?
Nothing. Give us a call. Love to talk to you.
Absolutely. He might not
I'm
have
talking to these guys forever. It'd be nice to talk to somebody else.
Anybody else.
Yeah.
Jeez. Mike Rauch, the mortgage guy from the mortgage firm. He's with us. Hello, my friend.
I am with us. Yes.
He
Good.
is.
Hi.
Hi.
Jim, do you see what I have presented to you in the oh well, go ahead.
No, what are we
No.
presenting? If you want to see what we're presenting, go on Facebook or YouTube, Florida Talk Real Estate on either. We live stream on a Saturday and you can check out what's being presented. What are you presenting to Jimmy D over here, June DePola, our fearless leader?
I'm trying to understand what you put up there, Mike.
Do you have another? You can add another view to the
It
cast,
says
right?
though add to stage when
There
I
you
click
go.
on it.
Oh,
there
yes.
it goes.
Oh,
Now watch
Oh,
this.
thank you,
Hold on.
Mike. Oh, you're getting
Now-
all fancy on
Hold
us.
on, watch this.
Watch.
I just want to see which one am I on? Oh, this one. Yeah. So is it? Do you see? Is it dynamic?
Yeah, it is
Yeah.
dynamic.
Look at that.
Okay,
Wow.
so take
I think it
that.
just
This guy.
moved.
Take that.
A little bit or a lot?
Yeah, a lot. I mean,
Okay.
You see there?
Wow.
Couldn't see.
So, well, you had it right when you were moving that stuff around. You saw the big increase for the last 2 years, and then you moved it back again. It's
Oh,
no
what
big
Jim
deal.
thinks
you
it
want
was
the
a big
3-year
increase.
view?
So you got to do no. You got to
It's all
take
relative.
the thing on the bottom and move it to the left.
What do you
The
want to
little-
see though? You want to see 2 years, 3 years?
97, going all the way back to
Oh.
97.
Well,
if
here's
you
the
do
all.
it that way.
Here's the all time.
Well, that
So we're still not that bad.
So-
Johnny, look at the all time.
so look
Oh,
at the
good.
spike on the far right.
Oh,
All
right.
time.
Hold on.
Look at that spike on the far right. It's almost vertical. The only other time we had it was right here. Can you see it on the screen? I don't know if you can see my thing on the screen, but whatever.
Nobody, you know, it's
Yeah, I
it's my
can't see it.
screen that's shared.
Yeah, I know. I don't know what
Yeah,
year this
81.
is because you're not on the one. Yeah, 81. So the last time we had a spike that was even close to this kind of straight trajectory
I
was
hear you.
1980, 81.
81
Which,
was
by the
rough
way, we
times.
got up to 18.23 or something on the interest rate back then. I'm not saying the public don't go saying that I'm saying that we're going to get to 18%. I'm just saying that we're in an economic cycle that economists are predicting are similar to that 1980s high interest rate, low economic activity, but the real estate market did not crash.
Sure. We see some similar pattern type things, but obviously we're in a totally different era. There's a lot of other variables, but information is king. We try to give you lots of that here on Florida Talk Real Estate. If you're on Facebook or YouTube, you see what we're sharing. That's an interesting graph for sure.
Yeah, that's Freddie's graph. Freddie's chart.
Yes,
that's
that's
the one we
Freddie.
talk about all the time, and now you can
Mhm.
see it live.
Beautiful. And
On
if
it.
you're
I'll tell you
missing
what,
out
you
right
know
now,
what I
this will
should
stay
do?
on. This will stay on Facebook. and
Yeah,
YouTube.
you know
so
what
if
I
you're
should
driving
do?
or you're missing
From
it,
now
you go
on, Facebook, the night I do the show prep, I'll put up the Freddie Mac chart on the Facebook page for Florida Talk Real Estate. So if everybody wants to come back and mess with the chart, they can do it that way.
There you go.
I'll do it every Saturday. So right now you can see we're at 6.757 for 30-year mortgage rates in Freddie Mac. Now, there's an article that came out in one of the Orlando news papers or TV shows, I'm not sure which, that basically said that that economists are saying Central Florida to feel turbulent housing market recession, say economic forecasters. Now, this is just a Central Florida specific article, but if it's happening in Central Florida, there's no reason why Central Florida is very similar to South Florida in the fact of tourism, people moving there. There's a lot of people from the north moving to Orlando and the Orlando area as opposed to West Palm or Boca or Fort Lauderdale.
Well, I know their tourist dollars have really been pushing down a lot.
It has a lot.
So that has a lot
Yes.
to do with recession,
Yes.
but we're talking specifically housing.
Real estate. Yeah, they're
Gotcha,
saying.
gotcha. Because I know their tourist dollars have been hampered in the last
Yeah.
year plus.
So this
But still doing well.
So this economist for Bank of America says, we think the housing recessions of the 1980s are a better analogy for today's market than the 2008 housing crash, right? And it says in the 1980s, soaring inflation drove the U.S. Federal Reserve to double mortgage interest rates, peaking at 18.6% in 1981 as the country's all-time high. While this increase helped cool inflation, it caused a steep fall in economic activity. But it didn't really cause a steep fall necessarily in the real estate market, like it didn't collapse. It just, the sales really slowed down. So it came to what Johnny was saying. If you need to do it, you did it.
Right.
If you couldn't afford it, you didn't. And if you could do it, but you didn't feel like doing it, you probably didn't.
Well, that's the time to do it anyway, right, Mike? The best time to buy or sell is when it's best for you. I mean, it's always the case that way, right?
I feel like you can't predict the market. Like if you're just the average Joe, and even a lot of experts can't predict the market. And so you have to get into a situation that's affordable and one where you can sustain the market. And don't put your, Jim, we have a couple that was considering their lending options one option they had on the table was some sort of interest-only style loan with a forced refinance period. So basically an interest-only loan that matured in 2 or 3 years. And so that's great for keeping your payment affordable for now, right? The payment on that is going to be lower potentially than a 30-year at current market rates, but you're in a forced refinance situation. So if you were to say, hey, Mike, I need to get in now, and then I just want to make 100% sure I can refinance within the next 3 years.
You can't.
And I said, there's no way you can predict.
Right.
Like it's market conditions. Our market conditions have to be right. So that means home values and interest rates have to be ideally favorable, and perhaps the home value has to be there for sure.
For sure.
If you had any depreciation, you might be stuck. The other thing is like, and a lot of people, you can get some rose tinted glasses, but it's like, I can't qualify now for whatever reason, but don't worry, in the next 3 years, I'll get there.
Right.
Credit, cash, income, debt, whatever it is that's like stopping you from doing.
Lotto.
Don't worry, I'll get it right. I had somebody, they co-signed for their cousin on a car loan, but like, don't worry, she's going to refinance in 6 months so I can get out. I said, well, what's going to change in 6 months? She can't qualify for a car now. She needs a co-signer because of credit. What's going to change in 6 months? Oh no, it's fine. I said, okay.
All right. Good luck.
Yeah,
Right.
yeah.
So anyway, it's a forced situation. So the point is, get into something that's comfortable. You don't have to do something in a certain deadline,
Right.
And you can ride market conditions. At some point, refinance will probably be on the table. At some point, selling for profit will be on the table.
And it doesn't have to be 2 to 3 years. We've been in cycles on this show. And Mike's helped out with a lot of customers on this where they got a loan and within 18 months they're refining because the interest rates dropped so much during that cycle that it was smart in a year and a half to go ahead and drop it because the interest rates dropped so much. You've done that in the past, but you're always very careful.
Well,
what are you saying?
It's funny because I have this conversation a lot now, which is you say interest rates dropped so much. They dropped. But I don't know if it was the rate, the margin they were dropping or the numbers they were dropping too. So if I told you right now, Jim, I'm going to lock you in at 7.5%. When are you refinancing? You refinancing at 6.5%?
Well, you have to calculate. We have a calculation.
We do, but how's that feel to you? You refinancing at 6.5%, Johnny?
I don't think so. No.
Right. But when we were at 4.5%, did you refi at 3.5%?
I did.
Right. Or we were at 4%. Did you refi at 3%? Yeah.
Oh,
so
I see
like
what you're
the
saying.
traditional
I see.
kind of
I
the
didn't get what your
traditional is
point.
like 2 points is probably like a smart refi if you're going to be there for a
10 years.
midterm. But I had people refinance call me like, hey, I can go from a 3 to 2.5.
Oh,
I'm like,
that was that poor veteran. Every
Right.
time you talk about that, I think of that poor
Right.
veteran in Winston Trails in Lake Worth. This is like 10 years ago, or maybe almost 10 years ago, and he had refied his house like 3 times in 1 year.
Yeah.
And paid extravagant.
It was cost to every one of
costs.
those. Every single one of those.
Yeah.
But now he's on a 2.5%, but it's funny because you would never you're not going to go from 8 to 6, right? Nobody's going to feel good about going, but
when you say it, I'm like, no, my instinct is I'm not going to do that. But
the math is the same.
The math is the same.
Yeah.
Yes.
So just so anybody's wondering about how you do a refi, the way we used to calculate it was that at 1 percentage point drop, you really got to start at least looking at it.
Yeah.
Less than a percentage point, it isn't worth looking at. That's what we used to say. But at the point, if you do get it, what you have to do is you got to take all the costs to get that mortgage and add that up, and then figure out what your monthly savings are and divide it into those costs. And Mike and I's general opinion is 2 to 3 years, pay it off. If you could pay off that amount in 2 to 3 years to break even, and you're going to stay in the house way longer than 2 to 3 years, then maybe it's smart to do that. Depending on what's happening with interest rates, if they're still keep dropping, you don't want to do it just when it gets to a certain point. If you see it's on a downward trend,
right,
you're going to wait a little longer. But that's the concept, right, Mike? Is
Yeah,
you
so
take the cost and divide it by the savings per month.
The simple analysis on the refi, and it's very similar to do you pay points now to buy a lower interest rate on the mortgage you're getting, right? When you're buying a home, does it make sense? So you're going to spend X amount of dollars, you're going to save another amount per month. How long does it take you to recoup your funds, right? Johnny, give me $4,000. I'm going to save you $100 a month. So I'm going to give you $100. And over the next 40 months, you now have recouped your $4,000. But then every month after that, I'm still giving you $100 a month.
Yeah.
Right. So that, and if you pay off the loan before the 40-month break even, you shouldn't have made that decision, right? You were in the red still. So now refi, there's additional analysis to do there, because most times you're resetting your term on your loan. So not you're paying money to lower your payment, but you're also lowering your payment by re-extending the term to a new 30-year term.
Right.
So I ask people a lot, what's the goal of the refi? You want to save, like, is it a budget decision? Like, you just need to get your payment as low as possible. Very good reason, right? Like, we're tight. We need to spread it out. I want to pay the least amount of interest over the remaining life of this loan, or any loan. And then the changes, like, well, okay, well, yeah, you're going to get a lower interest rate, but you're going over a new 30 years.
And
so
you
can't do
you
that.
might
need
want
to
to
shorten your
take
term,
the
right?
lower interest rate and go into a 15-year loan, right?
Also.
And also go into 15 years, so you don't lose all those years that you were paying in the advance.
Yep.
Yeah, so that's really good. I like when we always talked about that back in the days when people could refi.
I talked myself out of a ton of refis just by analyzing it in the correct way. Whereas if you call someone else, they'd be like, yeah, of course, we can do this. Yeah. It's not going to cost you anything.
Just want to go into one little part about the economy. Then I want to get into Ross. Ross, thank you for being so patient.
Can I just highlight something that you read to us? Because it was that article was so duh. Like that's what was supposed to happen. They were talking about the inflation. And
yeah, exactly.
And we raised the rates, inflation came down. It's because the spending slowed down. That's what's supposed to happen.
Right.
But they like worded it like, oh, but it's like, that's why
that
we
was
raised
the whole
rates.
reason why they did that.
That's what it worked.
Yeah, it did.
Right.
But it worked at a very high cost.
Well, so what scares me is if we have to get that far to slow our spending, my God.
I'm hoping that's why I'm saying,
pain.
oh my gosh, that's what I'm saying. Oh my gosh, if we get to 10 to 12, I hope we don't have to get that far.
Share my
Give me
screen
more
one
COVID
more
money.
time,
Oh,
Jim.
okay, hold on.
I'm going to go back to the mortgage just to highlight it, because look, you mentioned, look what happened. This is the all-time chart since they've been tracking it.
Oh, back on the stream, Facebook.
Yeah, so
and YouTube.
here I've got like the highlighter on, what is this, Timothy?
77-ish.
So 75, 77, it starts going up. Look at this. Boom, all the way up. We were at 9. Can I read that? 8.65, and then the peak 18.36.
That was what year?
And that was 81. So
81,
from 77 to 81, there was a very sharp spike in mortgage rates, probably led by the Fed. A fight against inflation.
Yeah.
That's
but
what it
here's
was.
the good news. Look what happened since then, Jim.
Yeah, it went
up until very recently.
If you look at it from 1981 all the way down until 2022, we were on a downward trend, pretty much almost a straight, not exactly straight, but on a downward trend for sure, and a significant downward trend.
Yep.
So now we're on the upward trend. I only see, Mike, to be honest with you, I only see right where you were that first spike, but it went down a lot and then it went back up again.
This one?
Yeah, right there. There was a big drop and then it went up again.
81. So 80, is that the
this is
right,
the
Reagan
during
win
Reagan
80 the first
Carter.
time?
Right.
80 was the first year for Reagan?
Yeah.
There you go.
Yes, it was like 80. It was just right on the verge of transition from Carter to Reagan. But very interesting to see what's going on with this. And I just want to say one more thing about the economy from reading. This is coming from CNN Business. This is a regulator from 2008, a Fed regulator. He says the housing market looks like a bubble. 2008 regulator. This came out last week. And this lady named Sheila Bair was heavily involved with the subprime mortgage problems that we had back in the day. And she goes, we're going through a bubble again. And she's saying that the bubble, though, isn't going to pop. It's going to deflate. That's what she's expecting. And that would be what's called the soft landing. I'm not sure we're going to have the soft landing or not. I still feel like we have a lot of turbulence, like they're saying in the Central Florida economy thing. I don't know what's going to happen, but we're going to keep an eye on it. It isn't the end of the world. Just remember this. People were still buying and selling homes in 1981. That's what I learned about this, because I figured at 18% interest rates, nobody was buying anything.
No, they were.
But they were, because people have needs. People get married. People have children. Some people just don't want to rent no matter what, because they know if they get in the real estate market at some point, their their wealth is going to increase faster. So let's just get in there, even if it isn't the most optimal time. Let's just get in and start the program now, start the process now.
That's right.
Might be interesting to look at was there a corresponding decrease in housing prices when interest rates shot up?
No,
like
that's
that?
what Johnny said. They stayed kind of, and that's what I've been reading. They've been they were kind of flat. They weren't going up, but they weren't going really down either. And why? Because there was
limited inventory.
Right? Because the builders weren't building when it was 18%.
Right.
There weren't builders out there building at 18%. They were hibernating.
They're not building it 7%.
Yeah, I mean, builders after that last crash in 03, 06, after that, I just felt like they've never recovered right. They're so psychologically shocked. They're so worried about what's happening in the future. They just won't buy down and do it.
So you're talking about the Orlando area. When was the last time you drove around the Orlando area? Or even
a month and a half ago.
Okay, so
I helped a guy buy a property
we were up there. There's building everywhere. Everywhere.
Yes, they are. That's where I looked at new construction.
It's like townhouses, just everywhere.
And it's funny up there. The construction's so different. Do you notice how much wood frame is being built up there?
I do notice, yeah.
And also, what I found when I was up there, don't need hurricane panels or impact windows.
That's mind-boggling.
When we're driving around,
required.
I'm driving around with a buddy of mine's a GC, and he's a Broward guy.
Mhm.
He's been here, done that. He's like, none of this is Miami Broward. None of this is happening.
Oh,
down
no
there.
way. I
None of
almost
this.
feel like it's temporary housing, like designed to be torn down later.
Almost, right?
Yeah,
It's funny you say that, because we're like, this is like they're just like popping it up as quick as they can to be like, it's not going to be here in 10 years.
Yeah, that's
weirdly.
what I feel like. It's
Ross, you got any sense of insurance premiums in Central Florida?
You'd think they'd be cheap, but
you'd think.
Central Florida is one of the high areas for fraud and litigation and things like that. So there's a lot of carriers that don't want to offer coverage kind of in that area. I think they call it the solo counties. It's like Seminole, Osceola, whatever, but it's called the solo counties. I mean, we don't do much up there. We're more, centered down here, but the premiums aren't, you can find them cheap on new construction. It's a lot cheaper for new construction than it is here, but like you're talking about, like a lot of the times, on the wind mitigation report, it's not amazing, because, they just they don't have to,
they're still,
in a 1995 house. Yeah. It's toenails or something like that, like legitimate toenails,
Yeah.
Because, they may have replaced the roof, but you're not going to do all the rafters and, stuff like that. So a lot of that stuff, the wind mitigation report doesn't come back amazing, but new construction, again, pretty cheap. Though.
It's new, right?
Cheaper than Jimmy's, I can say that. The shock that we had to give him.
We found out that Jimmy had an increase about 20% before he even bought the house.
And especially too, it's like having seen how they built the house, and they double strapped,
Yep.
and they not only did they go up, but up and over both of the trusses, and the steel plating that is on. And I only saw it on the garage side. I didn't see it on the other side of the house. But I mean, these steel plates that hold into the concrete, the roof. And it's like, are you kidding? This roof is, I can survive a tornado.
Yeah.
It's
I know.
amazing.
I wanted to get in. I'm glad that we're switching over insurance. I want to get into this Sunset article. Then I have a question about like barrel tile and cement tile roofs, Ross. I want to ask you a few questions because I had a bunch of houses with the same year roof, and I wanted to ask you just like what your experience has been with these type of roofs. But the Sun Sentinel came out with an article. Florida home insurance costs unlikely to fall despite reforms to reduce lawsuits, analysts say. I was like, oh, that's not good, right? They have a picture of a car in Central Florida, I could tell, or maybe Fort Myers, where it's just flooded and all the houses are flooded out and everything. Okay, so what they're saying is that the home insurance, the state legislator, was it this summer? It
was summer of last year. They started something. The big changes were in December of 22.
December 2022. They made some big changes because Florida is number one in insurance fraud. We're also
litigation too. We're number one in litigation.
Yeah, in litigation, but there's a lot of fraud involved in that. And
excess
then
litigation.
And I always say
we could say excess litigation.
And if we're going to talk about South Florida being number one, we got to give it all. So number one in insurance fraud and litigation, number one in mortgage fraud, number one in identity theft. We're just number one, right? Number one in wire transfer, legal wire transfer.
Shit.
So we're just number one in everything, right? So if it's bad, we're probably number one in it in some way. We have a lot of creative people out here that are trying to take your money. That's basically what's happening. So what this analyst said is that they did a study. They did a study and they actually looked at 50 countries, right? And they said that this company provides information about insurance, like for reinsurers and stuff, for 50 countries. So I'm wrong. They didn't analyze 50 countries, but they specifically said they did analyze Florida, and they said Florida's plan to fix the insurance is probably not going to work. It might work for what it's trying to do. We might get less litigation and stuff, but that's not going to fix our problem, she says.
It's not going to reduce premiums.
She says it'll help.
I mean, what it'll do is it'll stop excess increases.
Yeah, but
right. You can't, the insurers can't control, or the government or the state of Florida or any sort of legislature can't really control how much a reinsurance company is going to charge the insurance company.
Exactly. So this is the 4 or 5 things she said that are going to keep homeowners insurance policies high. Number 1 is hurricanes, okay, which I know is kind of, that. She says, with the way that's happening, with the amount of hurricanes we're having now and with climate change, in the future, prognosticating what's going to happen, hurricanes are just going to get stronger and stronger and more frequent. And that's going to mean more losses that have to be covered. Number 2, non-hurricane catastrophes. And what are they bringing up? Tornadoes. Okay, which is they're just talking about in Central Florida earlier this week. They're saying we're going to get a lot more of those. As the sea surface temperature increase, it contributes to a shift in severe convective storm activity, right? So they're thinking that Florida might start getting tornado alleys in their state where it's more common, just like in the Midwest where there's just areas, you get hit by the tornadoes all the time.
Oh, good.
They're thinking Florida is going to have that eventually. This is what the lady's saying. Then we have inflation and rising. I know, right?
I'm thinking something along those
lines. Then
wait a second. This report is based on
guesses.
Not guesses.
Well,
but
it's an analyst. It's an analyst. That's what they do. They analyze things.
I'm thinking, but then I also think, well, is this? Ross mentioned reinsurance. Like those are the big global reinsurance organizations. They've got the research.
Let me get there. Inflation and rising construction costs, right? So nobody can control that. The insurance company's not their fault if construction costs more than it did before because of supply chain issues or whatever.
Sure.
So that's the next thing. Next thing, reinsurance supply and costs, Mike. Okay, that's the next. I think it's the last one. The last one they have is reinsurance costs because the insurance companies really are setting their rates in large part based on what the insurance company behind them is insuring them for. That's called reinsurance. I never even heard of reinsurance until I was a newspaper reporter and covered it when I was covering city insurance, like for when cities insure stuff. And then I started learning about reinsurance. Like, wait a second.
Yeah. And so they have all their costs and then they're in business to make profit. So they have to find that sweet spot.
Right.
Too.
They got to get the spread. They got to make a spread from what,
But if I'm going to trust anybody's research, it's the bean counters at the reinsurance companies that I trust.
Probably so.
And because they're saying, hey, we need our profits to be this. In order for our profits to be this, we need our rates to be this. And it's not like we want excess profits. It's just we're profitable.
It's a competitive market. There's other companies offering, right? It's not just one reinsurance company. So they want to be competitive so that they can sell their product.
Yeah. So this is a lot of stuff's going on with this. I hope that this analyst is wrong and that we have better luck than what she's saying.
But if you go back to like the storms, like we had such an active 04, 05,
03, 04, 05.
Right.
Yeah.
And then, Wilma
05,
Wilma
6.
was 5. Yeah. So, and then 10 years, nothing.
Right.
Yeah.
Exactly.
More than that. And that's when like that,
that
okay. So now we're going to, now we've had a couple storms. Like now it's doomsday.
Yep.
That's always been my argument with insurance companies. You don't.
But I mean,
have
doomsday as far as the storms go.
Yeah.
Like like in that article, we're just going to be pelted by
what
more
they're
storms.
projecting is that we're going to get
tornado alley.
Yeah. But I mean, I think we thought that same thing 03, 04, 05, 06, whatever.
Yeah.
And then we had nothing.
Yeah, you're right. So we'll see how this goes. Now, Ross, I want to talk to you more about insurance. So I have 2 houses that have barrel tile roofs, original from, let's say, 2002 and 2003, right? Just from your experience of seeing all these useful life reports come through, a 2002 barrel tile roof, how much useful life do you normally see on those in general, or is it really all over the
10,
place?
At least 10.
Really 10.
Yeah,
So
I mean, because again, we think about it. 5 years ago, insurance companies would insure your tile roof for 50 years.
They would.
Some of them up to 50 years.
Okay.
No problem. Tile
Okay.
roof. Now we're at, and when you sell the warranty or, when you buy the roof, it's a 50-year roof. Just because the insurance companies have changed their guidelines does not affect the quality or condition of that roof. 5 years ago, it was good for 50 years. Now you're only going to say it's good for 2 because the insurance companies changed their guidelines. Do you know what I mean? So I think that's probably what you're kind of running into. But I mean, it should be at least 10, unless you go up there, tons of cracked tiles. If it's in bad condition, then most of the time.
I went to one house recently, and the house, from the buyer perspective, I was working with buyers, and the barrel tile roof, it needed a washing, but when I looked at it, it didn't look all the tiles were uniform. I didn't see any discoloration or like new tiles patched into the old tiles, nothing like that. The soffits and the eaves looked pretty tight to me. Didn't see a lot of rot or anything like that. And then we looked at the house next door, and they had different colored tiles speckled throughout the whole roof. It was a gigantic house, right? And they had speckled, different tiles.
Not intentional.
No, and for me, no, it didn't look like it was an aesthetic thing. It looked like to me they had patched the roof a bunch of times, and both those houses were built the same year because it's in a development, right? So they were built basically the same year, and I was really surprised at how the 2 roofs look so different, even though that both roofs were built with the same material and same colors when they started. And it's just something to keep remembering sometimes that just because. I mean, 2 neighbors literally next to each other. One roof looks pretty good, and the other roof looks like it's gone through, heck. You know what I mean?
It could be that the one neighbors kept the original tiles. You'll walk into a garage and you see a stack of tiles that were left over from when they built the home. Maybe something like that happened.
The only thing I could think of is that neighbor during a storm got hit with the coconuts, and the other one didn't, or whatever, or something like that. You know what I mean? But so if you have a 2000, so when people come to me and they say, "Oh, I've got a 2002 roof," but if it's cement or barrel tile, less worry about that. If you have an asphalt shingle roof,
then you're probably getting pretty close
pretty close. 2002.
I mean, you're at 21 years old. That's 25 to 30 years. That's pretty close.
My neighbor's asphalt.
Yeah.
Well, and the conversation is, can I get insurance on this home?
Exactly.
Right? Where it used to be like, how old's the roof? Like, am I going to need a new roof here at some point? It's shifted from that to, can I get insurance on the home with the roof in its current condition?
Well, that's the number one issue. But once you get to 5, 6, 7 years useful life, then it becomes very interesting. The roofs are a very interesting thing, because like if you're the buyer, okay, so let's say you get 6 years useful life, right?
According to your inspector.
Yes, this is a real report. And then Ross can get an insurance policy because it's 6 years. But technically,
but I don't think Citizens is going back is going to say anything until based on when it was bound and the life left then, until it gets to 3, less than 3.
Oh, that's new to me.
Only on existing.
Okay,
like
so
once the policy's written, if there's 5 today, there is.
Well, let's say it's 6. I get the policy.
So 3 years from now is when you'd get it.
Really? Not the next year? Not on the 5th year?
Now. No.
Oh, it'd be on the 3rd year.
So you need 5 to get the policy in the first place, but they're not going to force you to do something until you got.
That's new. I didn't know that.
Is that unique to Citizens?
That's Citizens. Yeah. That's Citizens. But I mean, that's 95% of the policies. And then if we're talking about a roof that only has 6 years of life left, we're at Citizens at that point because it's an old roof.
That's a good tip.
You could also have it professionally re-inspected to reevaluate how much remaining useful life
but
there
okay,
is, right?
so you're talking about a 21-year-old roof right now, right? Okay.
Well,
3
Earth
years
years,
from
Earth
now,
years.
Earth years. So 3 years from now, that's a 24-year-old shingle roof. You
Yeah.
haven't replaced that yet.
Yeah.
It's still good.
Oh, I'm
You
not
know?
saying I'm not saying
you know,
the
like
insurance-
that. When
yeah.
you're going in to buy a house and it's at a 21-year-old roof, in the back of your mind, you got to be thinking,
Got to get a roof.
in
Listen,
the
Ross,
next couple years, you know, I'm going. This needs to be replaced, and not only you're going to set aside the money or think about setting aside the money for that, but now you're also
until I see steel poking out of my tires, they're good. They're
Yeah,
still
that's-
good,
that's pretty
right?
good.
It's like
I
that
mean,
type
that
of
whole
thing.
and the
or-
thing is
Steel
what,
belted? Nope.
but
We're
that,
good.
you know, you guys are joking around about it, but in real life, when you start negotiating on this and you got a seller and buyer, it's it's not joking games at that point. It becomes very serious, and deals die over, you know, it's a deal killer.
Sure.
And there's two perspectives on this, just like Ross said. So if I've got, let's say I only got 5 years useful life, and I know that in 2 to 3 years I'm being put on the roof, some buyers are like, hey, I'm not giving you the price that you want, and you haven't done anything to your roof in the whole time you've owned it, and now you're giving me the hot potato to deal with it, and you want me to pay. You're not giving me
You want
any
top
consideration, right? You want top dollar with any
or like deferred.
consideration.
I mean, that's kind of like deferred maintenance
Right,
at that point, you know?
right. And so that becomes a real tug of war sometimes between the seller and the buyer, and they both have kind of a point, because if the seller can find another, because the inventory is so tight, if you don't want to deal with that roof in 2 years, they'll find somebody else that probably will, and give them the price without giving a whole roof. Sometimes it depends. So you have to be really careful with this roof stuff. If you got an older roof and you're very confused, you know, give us a call. We got Ross here from Brightway Insurance to help us with the information about your insurance policy. Me and Mike can help you about talking about if you need to sell the house or buy a house with the older roof and what to expect to do. We can give you all that free information. All you got to do is call us off air. Go to floridatalkrealestate.com and just fill out the information form and give us a call. We'd love to talk to you about this stuff. It's very confusing. I just learned something right now. I've been telling people that if you're on the 5th year, if you have 5 years and you close, the next year they're going to be knocking on your door saying replace your roof, and you're saying now it won't probably be
till there's
3 years of useful life.
Of course, they just changed from 3 to 5 on their
just
requirement
recently.
anyway, so it's subject to change, right?
Yeah, and that could change. That's true. And that's the other thing. So when people buy, I say, look, right now, these are the rules, but the rules have changed recently. We went from 3 years to 5 years. It could change again without any notice. So
I mean, but you know, if they do change, it's amazing how many 5
roofs
years
all of a sudden they got
all
5
have
years.
5 years, at least
Yeah.
5 years of useful life.
That's
know,
kind of why I said the Earth year joke.
Yeah.
Oh,
Like,
that's what
some
you
of this
did.
stuff is malleable. a little
Well,
bit, you know?
that's the last thing I want to leave off on this. I still don't have any proof of how they you know, the powers that be made this 5-year rule instead of 3 years. And the first thing I said is, how are the inspectors going to be able to define the difference between a 5-year useful life and a 3-year useful life on a barrel tile roof or asphalt shingle roof that isn't torn up and beat up? How can you really do that?
That's
It's
why
almost impossible.
No,
to
but
tell.
they're licensed professionals, Jim.
They're trained.
That's how they're trained.
Jim.
They're trained.
Yeah.
Yeah, I mean,
But
there's
it's asking
you
to
and
do
I don't
the,
have.
but
There-
it's asking. I'm not beating up on the inspectors. It's asking them to do the impossible. Is what they're saying. Is like to tell the difference between a 5-year and a 3-year.
Yeah.
I'm sorry. That's bull. That's bull. Nobody knows the difference between 5-year and 3-year. You know, if somebody, one of the roofers out there, we have a lot of roofers listening to us. If you have a form or something, explain the difference between 5-year and 3-year with photos or something. Send it to me. I'm all ears and eyes. I'd love to learn how you guys are determining 5 years versus 3 years.
when we see like 3 or 4 years on the 4-point, we're like, oh, so close. Then you go down and look at the photos, and because you have to have the photos of everything on the 4-point, you go down and look at the photos of the roof, and you're like, yeah, that one's not 5 years.
Yeah.
You know, so
That's like 12 months.
Can you
Yeah.
go, can you go for a second opinion, Ross? Can you try to
So,
like say,
I
hey,
mean,
I'm not
it-
happy with this result. I'm going to pay another guy $150 to come out and look?
You pay for the 4-point. That
Right.
is yours. You send it to me or whoever else you decide to send it to. And if I'm not sending it anywhere.
Right.
So Yeah, you can
So you
do as
could
many
shop
as
it
you
around
want.
a
Yeah.
little bit.
You could start at 2, get to 3, get
So
to
it's
4,
not,
get
it's
to
not a
5.
second opinion. It's not a third opinion. It's the right opinion.
Yeah,
That's
exactly.
what you're
right?
looking for. The right opinion.
Yeah. Well, insurance is still a big deal in South Florida and Florida in general. So if you have any kind of insurance needs, you got to call Brightway Insurance, Juno Beach, the only one. Yeah, there's a lot of Brightways around. Big deal, right? You got to go to the Juno Beach office. Ross, you do the whole state, right? You don't have to be just here locally in South Florida. So if you're listening to this show and you live in Florida, Ross can be your guy.
That's right.
Okay.
Juno Beach makes a difference, though. There's lots of people that are good at what they do. You need to go to people that are great at what they do and par up with your interests. It's your interest that matters most. Florida Talk Real Estate has a team of that like-mindedness. Pros that care about your outcome more than anything. FloridaTalkRealEstate.com. It's FloridaTalkRealEstate.com.
It's been pretty scary lately.
What?
Nobody's called me to sell their darn haunted house. I'm
Well.
still trying to deal with that. Happy Halloween, everybody. We're in
That's
Halloween month.
surprising.
Shocked.
So last
Shocked.
week, I'm really disappointed this audience let me down and not give me a haunted house
Again.
after 12 years on the show.
All you've
no
done for 'em,
haunted
Jim.
house. Everything I've done for you
All
guys
you've done.
won't give me a stinking haunted house to buy.
Nope.
There
or
might
to
be
sell.
something, a lesson to be learned there.
Well, I wanted to read about the Massachusetts home last week when the internet went down when it was probably haunted. So I want to give you a little facts about last week's show. And then I want to talk about a movie prop that's for sale. It's a house. It's a movie prop. And I thought that would be kind of interesting to talk about that in California.
Nice.
So the house in Massachusetts, they said, if you ever wanted to own a probably haunted funeral home, now's your chance.
This is the one we talked about last week.
Yeah,
right?
yeah, but the thing fell apart, so I didn't have all the stats. So I'm going to tell you. So what was good about this, and this is why I want to do this, the agent is doing unique advertising to sell the house. So this agent's just decided to own up. This house might be haunted, and she's advertising it as a probably haunted house, which is getting her national news, right?
Yeah.
Which is probably going to get the house sold. Now, I didn't check yesterday because I was so busy to find out if the house sold yet or not. But this house is, let's see. She said that it was very hard to sell the house, so she decided to pique the interest of the paranormal people first. So she figured, I'm going to go straight to the paranormals and see if somebody wants to buy this house, which is what I tried to do down here. I called all these paranormal groups. Do you remember that when I did that, guys?
Yeah.
Trying to find a haunted house, and nobody had a haunted house. Those guys weren't paranormals.
I mean, Mike might. I mean, we discussed it. Mike is Mike's
Mike
right. You could list Mike's as
Yeah, we could
possibly
list it.
haunted as well.
Yeah. Just don't stand in the front of his house too long. And it says, let me see. It's It's a 5,108 square foot, 5,188 square foot building. It was built in 1850 as a single family home, but over time, it became a funeral home, and it had been a funeral home for 100 years. They're asking $769,000 for this 5,200 square foot home down here. That would be a deal.
And funeral home. You
Yes.
get a business
You
with
get
it.
a business with
I
it.
don't know if it's still a funeral home. It doesn't
Share
really
my screen,
say.
Jim.
What do you
This
have?
is
Wait,
great.
hold
I'm
on.
loving this new feature.
Oh no, man!
This
You
is
drive me
hilarious.
crazy here, Mike. Now it's getting a little too much. I'm
this
teasing you.
Look at the sign above the for sale sign.
Yeah, it says probably
Probably
haunted.
haunted.
Probably haunted. Isn't that awesome?
Check us out. Streaming on Facebook or YouTube. If you're missing out, it'll be up there for
Probably
you.
haunted.
Yeah.
I love
so
that.
here's my rules about the haunted house, just so everybody knows. The rule is I have to find out that it's really haunted. So you're going to tell me your story, and I'm going to do some kind of research, or you're going to give me research to show why it was haunted. So you can't just go, it's haunted. You got to tell me Aunt Sally from 1968 is still living in the house, and I hear her creaking rocker,
Makes tea every
and
night.
that stuff. Yeah.
Johnny
yeah,
talked about
exactly.
his
Yeah.
the pet cemetery you got
That's
going
it.
on there.
And
Yes. The nails on the floor. It's a dead giveaway every time. Ooh,
I've got
dead giveaway.
I've got we had a pet who passed recently, and we have the ashes at the house.
Nice.
Right? So it's kind of like
You see like
They're
little,
there.
like ashy footsteps through the living room?
I haven't.
No?
No, I haven't yet.
Well, keep your eyes open.
Yeah.
When did you lose your pet?
3 months ago.
Sorry.
Yeah.
It's the worst.
Tiffany's baby.
Yeah, it's terrible.
Yeah.
When you have the ashes, it's clearly part
Yeah.
of the family.
Yeah,
yes.
yeah.
Yes. Yes. Sorry, but for your loss.
I don't mean to bring everybody down.
Yeah, way to ruin the show.
I thought the insurance thing
Yeah,
was going to bring it down. And,
down it.
Well,
Yeah.
turns out there was a lot less than 3 years useful life on that thing, huh?
Oh, geez.
Wow.
Wow. Wow.
Looks like we
Jim
need to
didn't even hear.
looks like we
I'm
need to
not
do a report.
listening because
He
I'm
goes,
trying
what did I
to figure
miss?
out.
You're lucky
Yeah,
you missed
what
that
I
one.
missed. I missed
Oh.
it.
It was Tiffany's. I thought
I
it
have
was
to
okay.
listen.
Didn't seem like you were too
I
bothered.
got
yeah,
to
he's
listen.
not listening.
So so there's another house that isn't really haunted,
Sorry,
but it's about a haunted movie that's for sale. The movie, remember the house that Jamie Lee Curtis was in for Michael Myers for Halloween?
Sure.
The first movie, right? The very first one. It's up for sale right now. It's on the market. It's in Los Angeles, on the market for $1.3 million. It's a triplex.
Oh, I didn't know
You wouldn't
that.
know. I
it's
wouldn't
an-
know that either.
an
It's a
investment property.
triplex. Yeah.
But that hasn't that house been reused recently? Like even in the latest reboots of the Halloween?
I'm learning right now. I assumed it was a set. You know, I didn't realize they
Oh.
used an actual house. I
No,
don't know.
that was in a neighborhood.
We need an
remember
exterior shot of some sort.
I guess so, yeah.
The house was built in 1906. It doesn't say when it was converted, if it was converted into a triplex or was originally triplex. One of the benefits of this particular house in the community is that is the great walkability, and that makes sense. And I don't know if the set, like in the movie, you remember the kids walking around for Halloween and how nice the neighborhoods were? No, I'm not sure if it was that neighborhood or if it was just a different neighborhood. But if it is that neighborhood and they were just using the whole neighborhood, that was a pretty nice neighborhood.
Yeah,
The kids were walking around and stuff. That was a lot of, those were, it was
It's in
kind of like
South Pasadena, which sounds
Yeah.
like it's. I mean, I've been to Pasadena for the Rose Bowl, and it seemed pretty nice.
Yeah,
around
it's
there.
pretty nice
around
out
there.
I
there.
feel
And
like
the
those
South
houses
End is
had
nice,
like
too.
wraparound
They call it-
porches with
yes,
columns.
it did.
Yeah.
Right?
It does.
Yeah.
That's why I'm surprised it's a triplex, because the front of the house looks like an old Southern.
It's probably gone
I know,
through
not
different
Southern.
stages in its life
I think
since the
so,
early
too.
1900s, right?
So if you want to buy,
Flop house.
the house that Jamie Lee Curtis acted in and Michael Myers tried to kill her a billion times in, go ahead and it's only 1.3 million over there in Pasadena. So check it out.
Listen, it's a triplex. We can finance that now
FHA financing.
with conventional
that's right.
financing. Nice. That was something we didn't talk about. There's a
Yeah,
lot
can
of
we
buzz.
talk about that a little bit? We only
Just-
got 3 minutes.
All right. So if you were buying a multifamily home and you wanted to do a low down payment, you could do it with FHA. You could do it with VA. 0% down on VA, 3.5% down FHA. And I'd love that for like young. That doesn't have to be younger, but that was like the demographic that, like, hey, you're young, you want to get some of your mortgage paid for by renters, and you're prepared to be a landlord. Get a triplex, get a quadplex, right?
Yeah, because
you can do
use
it for very low, relatively low.
assumed rent for your income, right?
Yeah, you basically get somebody else paying your mortgage for you.
Yeah.
That's the idea.
Beautiful.
And conventional, it was always hard to do a conventional, and there may be reasons you want to do a conventional loan versus those other two, because they required 25, 30% down, depending on the number of units. Now, Fannie and Freddie have both said you can do a multifamily home, duplex, triplex, quadplex for 5% down.
Huh.
So the low down
5%
payment
down,
on the
wow.
conventional option. So 5% down minimum required.
Very nice.
So it's just another, like, there might make sense, Johnny, for you to do a conventional loan versus FHA. Maybe you got great credit. You got the 5% down. Like, your MI is going to be lower than it would be on FHA. The MI is cancelable.
That's mortgage insurance.
Yeah,
right?
mortgage insurance.
Uh-huh.
It will cancel at some point. So there's some advantages to that, but you could never do it on conventional. You had to do FHA or VA.
Well, it's
Now you can do
another
conventional.
option there, though, that you
Yeah.
get to work some numbers and see what might be most beneficial.
Yeah.
That's awesome.
Yep. And I really love the multifamily as an idea, as a concept. Pricing has been a little bit difficult.
Here's a weird question. You may not know the answer to this, and I know the funds aren't there right now, but can you use like Hometown Heroes to do multifamily?
Yes. Yes.
Absolutely.
Yes.
Yeah, the biggest problem right now is the affordability, because the houses, the units per unit are priced very high usually for the low down payment to make the cash flow make sense.
Right.
Usually you have to put bigger down payment to make the cash flow
Yeah.
work right.
And there might be some, like, those programs have income limits. And when you're using rental income from the subject property, that goes into the calculation.
Of course.
So there's some,
So it can benefit you. It could also.
You got to have somebody who's sharp
Yes,
working
you do.
on that case.
Florida
I know
Talk Real
something.
Estate.
Mike.
Yeah.
Him?
This guy?
Yeah.
This. Are you sure you want him doing it?
I'll take them on.
All right.
Yeah.
Florida Talk Yeah, I'm pretty sure I do too. FloridaTalkRealEstate.com. That's FloridaTalkRealEstate.com.
I'm gonna go home and watch the movie Saturday the 14th, which is a comedy. I'm joking. I'm probably not gonna do that just because yesterday was so traumatic that I need to like laugh about the next day.
If you like good scary movie, I watched a good one last night. Russell Crowe. It's called The Pope's Exorcist.
I've heard of that one. Is it good?
It actually was better than that. We've been stalled on it because we thought it was going to be a lot of storyline. We didn't think my little girl would be into the storyline. So we waited for an opportunity without her to watch it. It dove like right into the chaos too. So she's totally going to be down for that. It's a pretty good watch. If you like,
this is the one
movies.
I've read the preview on that, probably watched the preview and then skipped it right when you're doing like the hunt for movies. So you're saying I should put that on there.
It's
Okay.
good.
All
Yeah.
right.
If you like Exorcist type movies.
Yeah.
Speaking of which,
good
who's going to the
demonic type
movies?
movie.
Have you seen the
Barbie?
new one?
Which one?
Exorcist.
Oh no. But it is going
Or
to happen.
Saw, 25 or whatever it is.
We're going to go see that in theaters hopefully next week sometime.
Isn't
Saw House
it-
of a Thousand
isn't it-
Corpses last week in theaters.
Oh wow!
Whoa!
Isn't it cool that the mother from that original movie is in this movie, and that was so long ago?
Yeah.
How old is she? She has to be in her 80s, I guess.
From The Exorcist?
Yeah. The
I
mother.
don't know.
107.
Yeah.
You got crossover between the two movies, the
Yeah.
new one
Yeah,
and the
exactly.
original
Yes.
one. Yeah,
Yes.
that's good stuff. Speaking of good stuff, FloridaTalkRealEstate.com. That's FloridaTalkRealEstate.com. That's good stuff. Your one-stop real estate shop. You got pros, an entire team of them at FloridaTalkRealEstate.com. We have dubbed it the one-stop real estate shop for a reason, because everything you're looking to do, buying a home, selling a home, stuck with a home, you don't know what to do, you're just having problems, maybe it's student loan debt, everything that touches the world of real estate, we got a professional to touch on that and help you through your situation. Know it, use it, love it, share it. It's FloridaTalkRealEstate.com on YouTube and Facebook as well. It's FloridaTalkRealEstate.com. Jimothy, you gonna do the locker room?
Sure am.
Beautiful.
Nice.
About an hour and a half till we get some Gators coverage at
There you go.
12:30. But yeah, we're going to talk a little bit of sports.
Beautiful. Well, I know Greek and Joe are ready to go. Thanks for all of your efforts as always.
Thank you, Johnny, Jim, Mike, Ross.
Thank you,
Good to
sirs.
see you guys. Have a great week.
Yeah, you do the same, my friend. Speaking of Ross, have an awesome rest of your weekend, my friend. Ross Komarinetz, Brightway Insurance, Juno Beach.
Thank you. You too.
Nice to
Everybody
see
out
you.
there as well.
Mike Rao, the mortgage guy from the mortgage firm. Have a great rest of your weekend.
Will do. Thanks, everybody.
And Jimmy D, that's Jim DePola with the Florida Home Pros team, Keller Williams Innovations.
Jim.
Enjoy Saturday the 14th.
Thank you. Paul just said I have a fact there: 1.8 million, now 1.3 million for the Halloween house.
Wow.
So I'd get it for you for 1.3. Hire me.
Was that Paul Krasker?
No, Paul K. He's a really big fan. He comes in
different
once
guy.
tonight. Thank you, Paul.
My man. Thank you very much. Locker room's next. I hope you're sticking around. Thank you for being with us. We'll be back next Saturday. It's Florida Talk Real Estate right here on Real Radio.